Good morning, October 25th. Thank you for being here. Hope you had a good morning. We're going to be streaming stocks, options, futures trading today. Watching the SPY for some setups for some dailies. Watching GME, AMC, GNS, whatever comes our way. You guys had a good evening. Hope you had a good morning so far. Glad that you're here. Sub up, like up, comment down. Happy Money sticks around. Follow us there on Happy Money YT. And we have a Discord server. Link for those are in the description. Put a Discord link in chat as well. Market opened 4 minutes ago. Morning, Bubba. I don't know if Guts is here yet to say good morning to you. That's full swing trade. Nice. Were they expiring today? Well done. So SPY's down 0.6%. Low of yesterday's 420.74. One day, yeah. Looks like we might be hitting that right off the bat here. There's low of yesterday. Actually, yeah, just passed it. Yeah, GameStop down 0.78. It's like Jones up 7.5. Gap is up 7. AMC's up 1.8. GNS is up 3. Snap had earnings. They did gap up, so it's coming down a little bit now. IMAX is up. There's a 2.5% on Snap. IMAX had earnings also. Give a gap up on there. Through the lows of yesterday. Morning Guts, he's here. The fake tech earnings would be bad or just fast. Eggs up 1.7. Lockheed. Not a whole lot very green on my watch list here. Firm is down 9. Run is down 6. Flicker's down 5, no surprise. Etsy down 5, Redfin down 5. Everything's just kind of consolidating. Chopping around. Yesterday rally, today not yet. Down another 2.5. 6.5. Got blue down 1. Back down here at 420.51. Still melting down 0.8 now. New lows there on SPY. Still going. Flashy, flashy. Still have that RSI divergence. The daily. Today we have new home sales at 10, so that's 15 minutes. Let's see if we have anything else. So we had mortgage market index, building permits. Not a whole lot this morning, but then new home sales at 10. And then commodities at 10:30. Crude oil, gasoline production, gasoline inventories. And a bond auction at 1. And then I guess Powell's speaking at 4:35. Interesting. I don't know where he's speaking at. Old lady got no whiz. Taking profits too early. Hard to know what the overnight swings really is. It might have been low of the day. Because really with those, you're just looking for the gap. The day trades you can open up in the morning, but you're paying for all this time from market close to market open. So if the gap does go in your favor, it makes sense to close at least some. I mean, scaling out makes sense. If you have more than one, sell some, leave some to go. But otherwise, yeah, you want to get out of it pretty quick because you've already lost whatever 12, 14 hours, whatever it is, of theta decay without the option to sell it. So if it's gone in your favor, it makes sense to just do that. It's nice though. It's nice when it works. It's not stressful. You just open it up and don't have to worry about it, and morning comes and you're up. I just traded overnights for a bit. Ended up doing it with futures, but yeah, opening a position end of day and just closing it in the morning. Majority of the market moves happen in the extended hours on SPY. But I would do it with futures, so I'd kind of end up opening up before bed and then closing it sometime in the morning. It's nice just not messing with it and just don't have to worry about it, and then either worked or it didn't. SPY down almost 1%. I was a swing trader. Nice. AMC is now down 0.5%. GPS up 5.4. I think they had earnings, maybe? No, just price target raises. Gap upgraded to overweight at Wells Fargo on cost controls and new management. Bam. Snap gave back all of its gains pretty much. Now up 1.3. Hawaiian Electric been doing? Just consolidating. It's crazy. Same with Pac West. That's a good point, Guts. Yeah, sometimes it does take a little while for the... Even after, I noticed that even during the day, there's like a pretty big spike. Seems like it's probably just lag on our brokerages and just the retail lag. But yeah, I'll notice where it doesn't quite price in the move for sometimes up to like 30 seconds or maybe even a little more. Up, Guts? You are two different people? Okay, same person. Okay, bye. But it also goes both ways. So sometimes it doesn't price it in, that it's how much it's up or that it's going up, and then you lose half your value very quickly. SMX is on a nice little uptrend here. All that volume. Look at what it did to VWAP. Take a little starter on calls there. Closing one of those. Well, position sizing, because this isn't a great setup at all. This is just potential for a scalp or early catch on the reversal. AMC is now red. Very updated in 1 minute. Hopefully it's good. Really forgot. I saw another one. Like it's out early. This was new home sales. You're low on SPY there. Still holding. Maybe have a tapering bottom channel here, a little rounding bottom. GME is down 1.3. AMC is down 1%. Gap doing well, hanging up 6%. Run is down 10%. Yikes. New low there on SPY. GME down 1.8. RSI divergence there on the 1 minute. Excuse me. Picked up a few more calls there. GME down 2.7. AMC down 1.25. SPY hanging out the lows. Did start to round the bottom here though. Looking for a break of this top of this channel. For a move back up here, 420, 60, and some strides to the high of the day. Gap fill. I don't think there's any more data that really should move the market today. I guess that bond auction this evening, or this afternoon potentially. Yeah, I mean, commodity, yeah, I suppose I could move it. Typically it does unless it's like way outside expectations. Which, yeah, oil has been maybe moving the market some, so could be. That comes out. So crude oil inventories comes out at 10:30. Crude oil imports, distillate fuel production. Gasoline production, heating oil stockpiles, weekly refinery utilization rates, gasoline inventories. That's it, all at 10:30. So, and then bond auction at 1, and PAL at 3:35. Sorry, 4:35. All right, AMC down 1.5. Me down 2.5. Very mellow morning. Got big data tomorrow. Market could be kind of waiting on that. GDP in the morning, 8:30. Initial jobless claims, durable goods, retail inventories, wholesale inventories, home sales, and the rest of that stuff's pre-market though. What was yesterday's volume actually? Yeah, yesterday's volume was kind of low compared to the prior days. It felt low. Very melty. It doesn't feel any different so far. Look at this. This liquidity being built is crazy. Down 1%. If we get a retest on the bottom of this channel. Six minutes.
And how
Oh yeah, they're at that
does it depend
convention,
on
whatever.
What type of property? Like, what kind of numbers are we dealing with there?
Yeah, that's a great question, and I think generally speaking, investors underestimate the taxes that are going to be due when they sell commercial real estate. They think only with regard to long-term capital gains, and
Okay,
for
it's
most
breaking
investors,
that.
that's going to be 20%, but it really only tells part of the story. If the investor lives in one of the 42 jurisdictions with state-level income tax, they're going
I'm
to
gonna
pay
add a
state
couple
income
calls
tax as
there.
well. and that can be upwards of 13 or 14% at the highest bracket, depending on the state in which the investor resides or the location of the property. And then in addition, one of the major benefits, as you're probably aware, of owning commercial real estate, you can write down the value of that property against the income during your lifetime of ownership.
Wow, that took like
the
15
property, the IRS
seconds to 30 seconds to fill that. That's really weird. This is just my brokerage, my browser. Who knows what lag in the chain.
Most often clients are looking at a tax bill.
35%?
Yeah, in the mid 30% range. That's right.
Okay, so you manage a 1031. It's a trust that, where do the assets come from? Is it from folks that need help managing this to pass on or transfer their capital somewhere without getting that big tax hit?
Yeah, I think you've summarized it pretty well. Generally speaking, this strategy has emerged over the last 5 years, and it allows a client to sell appreciated real estate, invest the proceeds in a professionally managed portfolio that will provide some diversification, that preserves the ability for the client to efficiently transfer the wealth associated with that real estate to their heirs, and it puts the financial advisor in a position to, for the first time, manage on those assets.
So instead of selling their property, they basically take what it's worth, and how do you assess how much it's worth and what goes into the fund?
Well, generally speaking, this type of strategy would not have visibility into the client's appreciated real estate. The client would find their own purchaser for that property, they would sell the asset, and then they would invest the proceeds in this type of strategy on a tax-deferred basis.
But that specific
coming
process,
down here, a little rejection on that break.
This fund that's the government knows is you're not having to pay that tax, and you have your money parked there where your son or your daughter can tap into that fund later on.
Exactly. I mean, essentially what these strategies accomplish is taking the existing framework provided by the IRS, so Section 1031 as you referenced, and utilizing that framework to build an investment strategy that alleviates the client from actively managing the asset while still preserving the tax
way to buy. Of course, they try and stop. We'll stop hunt first.
Okay, now, what about like from the outside of an investor, from a portfolio management, like an asset allocation? Is this for, like, if I think about like an advisor here or something, is there another way to look at that product from like the buyer's perspective that maybe fits into like a portfolio or something?
You know, I think one of the limitations of owning commercial real estate, bricks and mortar, is exactly what you pointed out. There really is no opportunity for diversification or asset allocation. With this type of strategy that I've referenced today, it provides the client the opportunity to diversify their interest across multiple properties in an actively managed portfolio. So for the financial advisor, it puts them in a position for the first time to really manage that position alongside the stocks and bonds in the portfolio and take a more holistic approach to the client's portfolio as a whole, and then eventually assist that client with estate planning.
Lag data.
Financial alchemy. Now you're like
Trading view is slower than Webull, different than
I haven't heard that one before,
TD,
but I think it fits.
different than E-Trade.
True, thanks for the insight.
Thanks so much, Oliver.
Something to
Appreciate
think
it.
about for sure. Drew Dornbush joining us from LaSalle Investment Management. All right.
And you
Get
win.
ready for this shift. We're going from 1031 real estate conversation to pot stocks. Next. We'll be right back.
Yeah, my option pricing isn't even moving. That's weird. Look at this. Price is not moving at all. Buy's moving, but these options are not moving yet. London Exchange down again. Look at that, that's crazy. Why it took so long to fill those two. Did a market order and it like didn't do anything. What the heck? Why the market's moving so slow? It's actually halted secretly. The derivatives market, which moves that market, has halted. Yeah, my pricing on E-Trade isn't moving either. What the heck? None of my option pricing are moving on my brokerages. Like I'm trading on Fidelity with all of them. Super delayed. I guess I'll just guess when to sell. Better anyways. Needs to know if you're up or down. Crude data came out, we broke that. My options still haven't gone up at all, even with that rally. So I think if I market order, I should get a better price than this. The largest financial marketplace in the world. Most volume, most traffic, most money in the world. Yeah, it's not moving at all. I'm assuming if I close one here, which I should anyways. See if I can close one. What'd it close it for? I have no idea. What? It actually closed it at 7. That's broken. Alright, I'm going to be talking to TD Ameritrade. Yeah, it didn't close it at the price that it would have been up here. It closed it at this frozen price. It closed at the same price I opened it at, which you know is not right. Dang it. They're getting blown up right now. This kind of stuff that could cause like flash crashes and stuff, so I'm kind of surprised market's not reacting. Maybe it's just, even if it's just with brokerages. No, my E-Trade's not moving either. Just even the prices on the chain, you can look at the chain, it's not moving. Hasn't moved in the last 5-10 minutes. Like, the SPY is moving. How are they going to fix this? How are they going to give me the proper price there? I have to look at the CBOE or whatever and figure out what price that was at that time. I don't have to go through this with all these options, though. I guess I'll just wait. Here's my screen recording. Option pricing not moving. Sold what I bought for 775 at 1024. Sold for the same price 1032. 725, 775. Which, you know, the price of that option was not the same here as it was here. And as you see, it's still not moving. Wow, this is the second time in like this month. I don't want to close these in case they don't respect the price that it should have been. Jeez, but I'm gonna be down on them otherwise. The option market's frozen. I'm surprised the market hasn't had a reaction from it. Unless it's just all the brokerages and not the actual options market. That's freaking trash. Yeah, E-Trade's still frozen. I don't know what to do.
Quick update for you, by the way. There's something weird going on in the options world, as producer was just getting in my ear, and our own Kevin Green was looking into it. But an issue from SIBO's options trading, and the SPX options were halted due to tech issues. So that's going to slow down volumes a little bit, but it's not going to stop the market from going the direction it wants, and it wants to go down right now. Coming up, we've got some charts. So we're going to look at IBM and Mattel ahead of earnings.
Still buy, but the price won't change. When you go to sell, it'll sell for the same price you bought it for. At least that's my experience so far. Forcing me to diamond hand 0 days. I don't want to sell these. They're more profitable than what it's showing. It means that theta farmers are winning. Yeah, the price I bought it for, the price, look. Bought 2 at 1024 at 775. Look, filled 78 cents. I was right here. 1024. Right there. I sold one after I noticed it was frozen. I sold one to test it to see if it would give me a proper price. Oh, looks like it's waking back up now. Maybe. Oh, they're still jacked. Look at that thing waking up. Oh my gosh. I sold this one at 1032, billed at 78 cents. Way up here. That spike was maybe the option chain coming back on. The price on mine's all still messed up. There's no way it's only up 10%. 30%. It's a little better. Keep going. Keep trying. There's no way that's accurate. Those would be up way more than 12.5%. What a freaking mess. I don't think this price is right still. No, I don't know. No, that's not enough for this move from here to here with that volatility on 0 days. It's not halted anymore, but I don't think the price. I don't know where they reset it to. I mean, they're moving, but I feel like I just got my options all reset to like a higher price or something, because percentage wise from here to here was not reflectant of what it would be. But I think that spike was from the options turning back on. What a clown market, man. Well, I closed another one. I don't think the pricing is right though. In 0 days for this to this? No. Yeah, I think with that whole little malfunction, it's just a little fleecy.
And then kind of lost it, but maybe they can find their way back here into the convo. Technically, Rick, the pullback the last couple months, did that kill the strength of the chart, or is there still some
jacked up.
potential for bulls?
I think there's still a little hope here.
That wasn't right at all.
Where we are today, we're finding some support within the past few days at our purple 252-day EMA, this purple line right here, and it was actually looking a little interesting this morning. It was looking like we may have been bouncing out of this falling wedge type shape that we've been in for the past couple months here. But things are backing off a little bit, and we are not really getting a strong breakout here. Maybe things could change as the day progresses here, but for right now, it's looking like a bit of a dud in terms of a breakout. So we had this uptrend line going across the lows. We gave back a lot of those gains recently in this kind of compressing, more triangular price pattern here with our two trend lines converging toward each other. And there's definitely been some technical damage. We slipped below our yellow 21-day, orange 63-day exponential moving averages. They're both sloping downward. We also gave up our volume profile point of control, this thick red line right here that denotes the area of heaviest trading.
This is the second time this month, man.
A bit of a double bottom there near like 140. We gave up that area as well. So this 252-day
waiting on their chat. It's probably gonna take forever
here, because there's not a lot of support once we start getting below that area. So that's the area near 137 or so will be key to watch. Got a volume node right below that as well, so perhaps some potential just a little bit below that area as well for support.
All right. So we're right now a little short-term trend working against the longer-term uptrend. IBM, though, could have a good message here. We'll see. It should be fun earnings now that they're kind of back in the mix, IBM. Let's talk Mattel, Renita, as we know the excitement around Hasbro, Mattel, and the push into new products. So where should we expect Mattel to focus their energy for earnings?
Well, you can look for pink to be splattered all over the earnings because this was the quarter of Barbie and its impact on it'll finally show up because the movie came out in the actual July quarter, this quarter, when the last earnings went through June. But analysts are expecting earnings to rise substantially from last quarter to 87 cents a share. Sales are expected to rise from last quarter as well to $1.83 billion. When it comes to regions, analysts are expecting solid contributions from North America and international segments to be able to actually drive that third quarter top line. And look out for the outlook as well, because while Barbie mania is expected to persist into the holiday shopping season, so will an overall challenging macro environment. So we'll get to see what the
another
company
call.
feels like
I'm pretty sure they jacked the prices up there.
These challenges.
All right. So it should be a big quarter for them to really
Prices are not accurate.
Push their competition really against the wall here, Rick. The chart seems to reflect some hope for that.
A little bit here, kind of a lot of similarities to our last chart. Actually, we had this longer term.
Had to close them to get it to move. There it is.
It's been broken. We had kind of a weird situation here where we had this triangular type shape
That gap
here
fill
above our trend line, and that's something that always stands out to me as a trader. These periods of relatively low volatility, compressing price action can be precursors to big breakouts and high volatility. It played out to the downside. We saw a lot of chop, price bouncing in between our two volume nodes, right around the 20 level and like 2150 or so. Now we're kind of struggling to hold on to that 252-day EMA, much like our last chart, except this one is not playing out to the advantage of the bulls here. We're falling below that key level here. RSI, we also have a matching trend line to keep an eye on here, going along with our downward price action here. Look for if we can break through the trend line and the 50 midline. That would be the key to resuming some bullish activity here. But, upside resistance, red dashed line here was a frequent stopping point near about 2045 to the downside for support. This green dashed line matches up with some old highs near 1920.
This doesn't make up for it. CBOE.
Okay, so a little drop
Its option prices are still jacked. I'm down like 40% what I should be, I think.
Of the chart, it's still got some big volume up there at the highs too. That might be a draw. Could be a fun report with all the Barbie details. Thanks, Rick Ducat and Renita Young for the chart look.
See if we make this, complete this inverse, or this, complete this cup.
Standing by for a little tech update. Not exactly earnings, Caroline, but very important. Apple TV prices.
Hey there, Oliver. Yes, Apple doesn't report earnings until next week, but it's in the headlines ahead of that because it's hiking prices on some of its subscription services. So we saw price hikes last October, so this must be an October seasonal thing for Apple now. Not doing much to Apple shares. They're under pressure today, but only off about 0.3%. But it's interesting, Oliver. I was literally just thinking that maybe I should sign back up for Apple TV Plus because people were talking about the morning show, and then I thought, I'll wait for all the episodes to come out, and then I'll only do it for a month, one of those type of things. And guess what? Now it's going to cost me $3 more because Apple TV Plus will now cost $9.99 per month as opposed to the previous $6.99. And then last October it was raised from $4.99. So it's been quite a substantial increase over the past year. For those who subscribe on an annual basis, it will go up from $69 per year to $99 per year. Apple Arcade is going up by $2 a month to $6.99, and News is up to $12.99 now. That's actually the first increase for News and Arcade since launching the services in 2019. Some of the bundles will also be more expensive as well. Apple Music and Apple Fitness safe from price hikes so far, so at least subscribers to those services don't have to worry about shelling out more money, at least not yet. But as I said, not doing a whole lot to Apple shares today. They're off about 0.3%. They're still up about 1% for October, but all things could change come next week when it reports earnings on Thursday.
Yeah, hey, it's hanging in there today. You know, only down 1/3% when the market's getting toasted, so that's certainly saying something. Maybe hopes that Apple TV will generate a little bit more profit with some higher prices. All right, thanks, Caroline. Shares a little changed, but to the downside alongside the rest of the NASDAQ as we're lower by about 1.5%. A little bit of a rough morning. So rough that options stopped trading in the S&Ps. Let's go to morning meetup panel in here. Let's talk about the session as well as the rest of this week. Nick Dudrakis and George Tillis joining me. So earnings, George, let's go back there for a sec.
It was just S&P that stopped trading options?
Overnight into today. It's
Weird.
like a Alphabet problem with a Microsoft solution. The only catch is that Alphabet seems to be a bigger problem than Microsoft is a solution, George.
Yeah, well, I think at the end of the day, if you look at the disparity between the two performance today, I think it has to do with a share shift in cloud. That's really the challenge that Google is facing today. Their other revenue only grew about 2.5%, which is, again, quite low, and that includes, of course, their cloud business, but their ad business as well as ancillary businesses are still performing quite well. And now it takes a lot to move a stock of this size, down 10%, and I can see why it's down. I think this market is we're in a situation where this market is essentially in a shoot first, ask questions later mentality. But at the end of the day, this might be an opportunity to purchase a quality name that really has, like 92% market share when it comes down to search. You have to keep that in mind, and advertising
pulling
is
back
still
to
relatively
VWAP.
robust across that spectrum.
Still on a
of
majority of my
business.
calls.
So I think the cloud business, there's a
Maybe I should
concern about
close
their
more.
growth
I don't
there,
know.
but it's not their core.
My ad here on the bottom of this channel.
Business, if you will. I think there's been a share shift going into Microsoft, and that's why we're seeing a disparity.
Okay. Search revenue for Alphabet rose more than 10%, Nick. So something else that's important there, I think, too, is that even though the shares for Alphabet are down right now, it's not because Microsoft suddenly swooped in and took their search power with their new AI tools. So it does feel like even though Alphabet's down, there's a bit of a narrative disconnect on what some of the AI hype around Microsoft might have expected.
Well, I think George said it really well, right? The core businesses of both companies are performing very well. Those core businesses, though, are different, right? And when you're judging both businesses on sort of the interesting topic of the day, which is cloud and AI, Microsoft has the advantage. When you look at the actual kind of grinded out nuts and bolts, the plumbing of what's going on the internet, Google seems to just be strengthening their lead there. It doesn't seem like they've been really impacted at all. I think what's interesting tying these two to the next of the Magnificent Seven tonight with Meta is what is advertising revenue going to look like for them, because search advertising and search payment was really strong for Google, right? That wasn't a terrible quarter. So I think that is an interesting trend. Snap signaled some weakness there, right? So we've seen this trend play out, guys, many times where the marketing folks and the companies that are spending on ads, right, in a time where the budgets are leaner, are putting their dollars towards where they're going to get the most uptake, where they're going to get the most coverage. And that I think kind of bodes well for that continued distancing of the top names, Google on search, Meta on social in general, just the total user base with the 3 billion or whatever it is, and other names, smaller names, not getting as much of that slice from sort of a marketing budget perspective. So I think that's going to be interesting to see if it continues to play out here as we get more of these earnings names coming out.
George, tomorrow, what do you think for GDP and the economy, which will be in focus? Good, still bad for stocks, or will good be good for stocks if inflation is good too?
Well, yeah, I mean, that's the kicker. Inflation is still the culprit that is putting pressure on the overall market. So I think at the end of the day, if you just look at the GDP estimates, one, the estimates are quite wide, between 2.8 and 6%. Consensus around 4.2. If you look at the Atlanta Fed, their dynamic model has about 5.4% in terms of the trends. So I think at the end of the day, OJ, and I talked about this in the past few months, I think the real catalyst behind policy that's supporting both the economy and the market is the fiscal flows, because we're running $2 trillion in deficits, $7 trillion in government spending, and there's a
I'm out of the rest of
multiplier
these.
effect. I know everyone looks at a sort of unilateral variable, which is monetary policy, but you have to think about fiscal policy. So again,
So you might
assuming
just chop for a
we
bit.
do reconcile the budget,
Dang, I
assuming
should close
rates
more up there.
stay relatively tame, I suppose, below the 5%
What?
range, and assuming again the Fed
Oh my
pauses, I think these
gosh.
are three catalysts that potentially
I've
could
been hiding my
cause
P&L,
the markets
which
to rebound. But
I like to
we
do.
may end up overthrowing Monday's lows.
You don't want to
So
trade your
that's something
P&L
to
and
keep
trade
in mind, because we're still
charts.
trending around that 200-period moving average.
And we gotta try and hold that. It seems
That
like
was
right
that
now,
laugh. That was my
we're
reaction
hanging
to
on
seeing
for
it.
dear life, but boy, we're really getting pressured. S&P's down 35 points. Nasdaq down 220. Thanks, Nick. Thanks, George.
Yeah,
for helping me close out
that
Morning
jacked
Trade
everything
Live
up. That
here.
options
All right, we're off
freeze.
to the races from Philadelphia.
I
Coming
don't
up,
think the
right,
prices ever
AMC
actually came
Trading
back
360 with
what they
Nicole
should have been.
Pavlidis. Don't miss it. I'll see you this afternoon. Stocks down.
They unhalted, but they didn't know where to price them. Sucks, man. Yeah, even here. These options were barely more profitable than they were barely up from where they were here when it was just trading flat. Lower by enough. Lower by 0.2%, whatever that is. Yeah, 0.2%. A little head and shoulders there. Close because they're breaking this channel, so I don't know, might just be chopping. Alright, almost 11 o'clock. I've got 30 minutes to EU close. Thanks, guys, for your support. 9 of you on your thumbs ups. Appreciate it. And spies at VWAP. Making little head and shoulders here. Tempted with puts, but kind of just want to chill. Just chop in this range for a bit, build some liquidity. Might have to wait for afternoon for the next play. playing a higher stakes poker now. Went up a level. Get used to the numbers. I have the high flush. Nice. Whoa, look at that spike on SPY. Weird. Got volume with it. Weird amount of volume. Might be like the institution buying or something. And maybe the 200 still? Yeah, they like to buy on the 200. That's what that is. So, while you're all in. Queen. Choppy though, choppy.
Is still
playing
Nice.
second fiddle to Microsoft's cloud dominance. Now, I will say, though,
They didn't take you
this
with them?
name was up more than 57% on the year into this report, whereas Microsoft was up something like 36%, positioned very differently. But just showing right now, we are seeing such a divergence in performances from these stocks the day after their earnings. It feels very reminiscent of Tesla and Netflix last week.
Yeah, well, look, it's such a busy earnings season, and this is a huge week. You have 1/3 of the S&P 500 names reporting, and we'll have Meta today after the bell. But Microsoft has been a big one, and unlike what we're seeing with Google, Alphabet, Microsoft has been a clear winner. It's up about 3% as we speak. Tell us a little bit about that.
Yeah, so when looking at Microsoft, I mean, this name also really strong numbers after the bell, and I was watching the tick chart after hours, initially surged and then it was dipping a little bit, but nice to see that move hold on the fact that they are continuing to push into AI. Their intelligent cloud unit, which is basically all things Copilot AI, is crushing it. We also saw Azure finally post some numbers that the street was pleased with. And again, Microsoft very differently positioned into this report, hadn't seen the same degree of outperformance, but was able to post some sizable revenue growth, was able to see just more figures that signal the fact that they could continue on this trajectory. Microsoft, I've always said, is the more stable, the more boring, if you will, of some of the mega cap names, but it is still so dominant. So nice to see that near 3.5% move hold here.
Yeah.
And again, just the fact that they are continuing their dominance and not only their OpenAI investment, but also their own intelligent cloud offerings is seen as huge, I think.
Yeah, and then what about Boeing? Tell us more about that.
So Boeing is interesting because we are down almost 2%, about 1.8% here, but this name, we heard remarks from
Green 9, well done.
as well CFO regarding the fact that they will be delivering fewer 737 MAXs than expected this year. The company is working through some major production flaws that were hitting some of their best-selling aircraft. So they did also say they plan to hand over between 375 and 400 of these planes this year, down from previous forecasts of 400 to 450. They maintained their expectations, though, for 2023 free cash flow between 3 and 5 billion, despite these production problems. And their CEO did say that they've heard that those outside of the company are wondering if they've lost their step. They view this as quite the opposite. Most importantly, they said they've worked hard to instill a culture of, right now, just continuing their growth, putting their heads down and focusing on what matters to the company. Also saying that they can fix these issues with the 737 MAX, to quote him, the CEO, once and for all. So lots of positive takeaways. This name has seen so much weakness into this report in the last couple of months. Interesting to see shares down. I thought that investors would be pleased the fact that they were able to give some more definitive timelines on so many of their aircraft delays. But again, modest move to the downside. Almost feels like nothing compared to Alphabet, though.
Yeah, thank you for all of that. Jenny Horn, some of the most important top stories today. Good to see you. Thank you. Now let's get some insights on the news shaping the markets. And for that, we welcome in Eric Metz, CEO, Spider Rock Advisors. Thank you so much for being with us, because we think about the uncertainty in the market. Yeah. We see the VIX moving above 20. What are your thoughts on what's going on right now?
It's been an interesting year. I'd say the most recent news is the crisis in the Middle East.
Jacks, come on, man.
Israel,
no Jack.
Which has kind of thrown a risk-on appetite down the drain for the year. But again, the whole year has been a little bit of a different tale than last year. And so volatility last year was something that was, I'll call it, predicted, but still is, when you're exhibiting it, it's difficult.
He raised on pocket jacks. The ace king flop
in the first half of the year, and now volatility is poised to rise. It was. We were speaking, I think, probably in July or even August before Labor Day, Nicole, and volatility was near its lows at that juncture. And so
I have a little tapering at the top here.
Isn't necessarily unexpected. It's probably back to, I'll call it averages, but the cause of the volatility spike is definitely, the geopolitical risk at stake.
And that's the thing.
I don't know, it's choppy though. I don't really want to be in a position. I'll take my $6 in profit today. For now, that's adequate.
When someone's trying to set up a portfolio.
I bought a plethora of calls down here, and somehow that didn't make any money.
VIX is a very useful tool to hedge. But in reality, a lot of investors have a fair amount of embedded capital gains, and so using instruments that directly protect their assets with a frictionless to tax is a lot of our focus. VIX does play a role, but we're really focused on broad-based diversified equity portfolios. That means the S&P, NASDAQ, Russell, and then anything idiosyncratic. I know we've had some Microsoft and some Google chatter here this morning, so focus on the individual names.
And look, I mean, what are some themes you're seeing? I mean, I know you can't talk to specific stocks, but what themes are you watching for the third quarter here?
Yeah, I think folks that
this RSI continues to climb from these lows.
When you have to.
Bullish.
And so folks that have been fortuitous to be in the NASDAQ or have exposures to
especially when you had that divergence back here.
We've done a lot of work for them in protecting those assets this year, and so you see something like Google today. That's a fortuitous time to have been hedged. And Microsoft, while hedging would have been prudent, you know, it didn't really require it, and so it's
wait for the cut to complete.
So
maybe grab some on the handle.
The security, the situation, the goals of the investor, and really the backdrop
just be chomping
from where the options market is allowing us to provide value.
That doesn't play out.
I know some traders that are more heavily in cash at the moment than they have been in many, many years. What are your thoughts there?
You know, sometimes it's a contrarian indicator when everybody is really defensive. You can often get some short squeezes or some risk-on rallies, and people have to play catch-up. So I'm always keen to when I see indicators of that. You know, cash on the sidelines, figures at all-time highs, margin rates, et cetera. But at the end of the day, it's defensive and posturing. You know, I think people, for rightfully, you know, good reasons, have a defensive mindset. Equity valuations, interest rates having risen so fast. Fed, you know, really scrutinizing data into their policy. Unemployment still at bay, and so, you know, take all those factors and you enter in the geopolitics in Israel. It's a reason to be defensive.
So do you have any? I mean, we don't know whether or not rates will go higher once again. I mean, you tell me your thoughts. And what kind of predictions do you have for the market? I mean, I know people have been watching some really key levels, whether it was 43.50 or 4,200 or 41.95 and then 4,100. Where do you see the market heading in the next 6 to 12 months?
Yeah, I think we've found a lot of support, and there is an inflection point at 4,200. If one is to look at moving averages or really just S&P having rallied 10% year to date, I think the NASDAQ and the Russell are a tale of two cities in terms of NASDAQ up over 30, almost 35. Maybe after today it's a little less. And then, you know, Russell down 5. But I think the real story of this year is rates and the speed of the rate rally and the bond sell-off. I think the volatility in rates, the volatility in large-based proxies in the ETF space, IEF in the intermediate duration, TLT in the longer bond. But the vol of rates has been, I think, what's been most surprising this year. And expecting that to subside, I think, is one forecast we would make. And how that translates into equity prices, I think time will tell.
Eric Metz, Spider Rock Advisors, thanks so much for being with us here live at the Schwab Impact Conference. Enjoy your rest of your time here. Thanks for being on the show. Really appreciate it.
Thanks again.
All right, coming up next, it's the Big Three. 3 stocks, 3 charts, 3 trades. Rick Ducat.
Says it was a market-wide chat that it was a market-wide issue at the exchange level, but it's since been fixed and should be working now. Oh no, you kidding me? On the river guy? At a 9, a higher 2 pair on the river. That was a stupid call on his part. Pretty stupid call. Snap, full house, look at you. How did ace 10 beat me? What? So, taper on the bottom at our rally. Now we're starting to taper on this rally, which tells me chop potentially. Now it's showing signs that it wants to roll back over. But just probably stuck in this range for now. One of those days, might have to wait for it to fully complete this cup. Fully break down this level. Probably what I should wait for.
months. Look, the KRE is starting to approach some of those March lows right now. Some of the recent lows on the year are being approached. It's very quietly, it's in the backdrop, but it's, again, everybody seems to have forgotten about the fact that, look, it's not even about interest rates at this point. The bond market is just in an outright crash to the downside. There's unrealized losses at these banks. It's going to continue to pressure this sector so long as the bond market is down. This trade is a NOV 24. I'm just doing an in-out spread, looking for a quick burst to the downside. So a NOV 24, buying 39 puts, selling the 37 puts. It's done for a 75-cent debit. Again, a put spread to the downside.
Yeah, understood. All right, what do you think of this one, Rick Ducat, as you take a look? I mean, it's not just the high rate environment, it's the big picture.
Just buy, dropping back down to VWAP, just chop really until we get a break. Break on this level or breaks the upside. Upside, I need a full cup.
Heavy earnings calendar we have, but
Up to complete.
devastation in this name earlier this year. We're down like 43-42% off those highs. The trend line is still downward here. We did have a few forays to the upside there, a little bit of breaches of that level, but mostly it's been a pretty consistent downward trend there. We also broke through some support levels that caught my eye, this red dashed line here where we established some lows near 39.58, 39.60 or so. We are moving rather convincingly below that point here. Once again, I mean, the chart is bearish here. We're below all three of our moving averages. The moving averages are trending downward. They're diverging apart from each other. Once again, same situation as our last chart. We also, once again, gave up our volume profile point of control recently and have just been moving through support. RSI, our measure of momentum here, if we get any worse today, we're going to cross into the oversold area. That's not my opinion. That's just, the way this indicator works. The declines in the price would be reflected in momentum here. So that would be a bearish sign. If we just get a little bit lower and we close below that point, that would be a bearish thing to be on the lookout for further declines in price potentially here. Potential support, 36.08 was our worst close back here. That was the same day we made those yearly intraday lows, but we recovered a bit here. That would be the area I would really be concerned about traveling below here, but 39.58, 39.60 or so, those previous lows that I mentioned here, that would be a resistance mark to watch here, pretty close to Don's strike price as well here. And if we were to keep going upward here, we've got quite a bit of resistance to overcome. We've got the confluence of our 21-day EMA with our trend line right around 40.60 or so. That would be the first major hurdle to clear, and it would be a rocky road upward, to say the least, I think.
Yeah, wow. All right. Final thoughts here, Don, on this one before we get to Bitcoin or BitO.
Yeah, the bond market probably is not too far from bottoming out. And if you're looking at KRE, again, my trade is just a little shorter duration burst to the downside. But I think that the best thing that these regional banks could hope for is a very fast, very unrelenting move in the bonds to the downside and a recovery thereafter, which is very likely what we'll see. We want to see degrees of capitulation form a little base of support inside of the bond market, a rally back up will probably lift these regional banks along with it.
I preempted some puts there.
Right, and
that
next
BWAP
up,
break.
BitO. This one, unlike the others where you were a little more bearish today, this one is a little more bullish. Why is that?
Well, Nicole, is it bullish or is it, bullish for all the wrong reasons? As you well know, I say that often, is right now we're looking at alternative asset classes. Where can we actually put money? Clearly, the bond market's a rough market to be in, right? If you want to buy something in the marketplace and you're looking at the S&Ps today and, they're down almost 1%, what are you going to buy? And right now we're back to BitO. We're back to Bitcoin, or BitO, which actually tracks, of course, the Bitcoin futures. In this case, I'm just going to jump on trend, very, very short duration trade. This is just a November 3rd expiration. When I say jump on trend, as you'll see in a moment when Rick actually brings up the chart over here, that trend is clearly and decisively to the upside. Look, I'm just going to go out, NOV 3, buy an 18 call for 40 cents, and that's it. I mean, this is a roll of the dice for the continuation of upside in BitO.
Yeah, and look, who knows what's going to happen with all those spot Bitcoin ETFs. We've seen Bitcoin surging. BitO was the first, which really trades the futures. And whether or not it'll be jumping too. Tell me more. Rick Ducat, when you take a look at the chart.
Pretty easy chart to analyze here. Don hit a lot of the main points. Downward channel type shape, starting with those yearly highs here. Downtrend has been obliterated by this upside price action here. We're above all of our moving averages. They're all trending upward now.
Those freaking candles.
And that
Such evidence of chop.
1816 was our best
Ugly.
close on the year. So that's obviously the point to be watching to the upside. Anywhere between 18 to 1840 or so would be a potential resistance area. But if we do clear that, who knows what could happen here. For potential support, around 17 based on the old lows from this gap. RSI overbought, sign of strength, moving higher today with price here. So all signs are pointing toward up at this current time here.
All right, thank you for that, Rick Ducat. Final thoughts here, Don Kaufman.
Yeah, buckle up for the remaining earnings in tech the remainder of this week. As I said, it's the Magnificent Seven. Right now, they're on the dance floor to some big sell-side activity that would open the door for a bigger move down inside of the S&P. So, again, buckle up, watch these earnings very carefully.
Look, we already had Google. We're seeing that in a big way. We'll have Meta after the bell. I know you watch Apple often. Any thoughts on any of the names in particular, one way or the other, quickly?
Yeah, the next one is going to be, of course, Meta, obviously fairly critical over here. Yeah. But I'm much more interested to see what Amazon's going to say. Amazon, the cloud business. Cloud business is going to be critical because if Amazon misses in there, it's over inside of tech.
All right, good to see you both. Thank you for the big three today. Rick Ducat on the charts, Don Kaufman of Theo Trade with our big three. Thank you both, gentlemen. Good to see you. And coming up next, we're going to spotlight AI technology and how it impacts the energy sector, cybersecurity, a lot more. Coming right back, Trading 360, Schwab Network.
I was born on the south side of Chicago. It's been
This dude had quads. Oh my gosh. What a slow play. Huh. I got so lucky I landed a straight. So that was a crappy buy. Spy's still in this chop. I'm making head and shoulders here though. Did taper at the top too. Doxing drama? I don't know. Is it like new stuff? I don't know. Not anything new, I guess. Faulty folds, queens. I know I didn't ever watch that poker tournament or whatever you guys were watching. Infamous pocket queens fold. Spy breaks out here. I'm gonna have to close these. Close them down. There's a stop hunt. See if we have a continuation on this. Excuse me. Nice head and shoulders there, though. Calls it. Continues to build that shoulder. Them, they're ladies. Morant's kid? It's not cool. Nice guts. Well done, man. I guess I don't understand what doxed means well enough. I thought I knew. Until you put it like that. Now I have a whole new understanding. Trying to chat with someone else with TD now. First person I didn't get back to, but they said, oh yeah, it's a Mark White issue. It's working now. Then ended chat. Like, no, I don't think you understand. Yeah, I kind of... Why? That new school terminology is... like... it derived from dropping box or documents. I don't like that word. A form of cyberbullying uses sensitive or secret information. Yeah, I'm assuming it's gonna get a lot worse for DP once barbecue if it doesn't work out. He is put quite a big stake on barbecue, not just financially. To let me know publicly what shampoo you use. Head and shoulders? Oh my gosh, she has dandruff? It's gross. Extra strength? Oh, what an animal.
Spend because of the war, and so that is providing them maybe a little bit more cautiousness when it comes to trying to provide an outlook. They're not sure if it's going to be a short-term blip or something that's going to be a little bit more longer term. When you're looking at the daily active user numbers too,
no, I know people are super worried about that.
Did miss the street's expectations, and that also dragged down Meta.
My
we have Meta earnings coming out
mission
after the close today,
or anonymity
having an impact when it comes
in
to
a minute. I don't know how to say it. To be anonymous.
Spend.
All right. Thank you for that, Kevin Green. Good to see you. Appreciate it. Thanks so much.
Welcome to the trade desk.
All right, now it's time to spotlight
Thank you.
the energy transition
I feel welcome.
into a net zero future and how AI plays into that. And we have a special guest here live from the Schwab Impact Conference to tell us all about it. Nilu Razi Howe is with us, investor, executive, tech entrepreneur. Thank you so much for being with us.
Thank you.
So we talk about this. Tell us a little bit about the big picture and the transition that's happening that maybe we're not in tune the way you are. Tell us a little more about it.
Well, there is an absolute transition happening to a decarbonized future. And what we're focused on at Energy Impact Partners is investing in the next generation of energy infrastructure. And that's everything has to change, from distribution and power and storage to how the grid works to next generation molecules, but it's also the build environment and the infrastructure. And of course, around that is also securing that infrastructure and making sure that it's resilient in that connected world where everything is more efficient.
Yeah, and as we talk about AI and data and how this all works, security comes into play, like you mentioned. Talk about the AI factor and how it makes things better for us going forward. How will this help in energy?
Absolutely. So climate change is the existential threat that we face, not just as a nation, but globally. And the analytic and predictive capabilities of AI are going to transform the energy future as much as they're transforming every industry out there. Right. So being able to better predict supply, to better predict consumption, to create better demand curves, to have smarter grids, smarter cities, to invigorate a mobile energy future. AI can play
successfully talked to yourself.
Role in that. And as I said, AI is a transformative technology. It's impacting so many different verticals, and energy will be one
talk about security, because you said to secure all of this is obviously a national security story, but tell us more about that.
So one thing we need to think about is we live in a world of great power competition. And today the U.S. is in competition with China. It's in competition with Russia. Traditionally, how you manage that competition is by having command of the commons, as we call it. That's land, air, sea, space. That requires a lot of investment in the military-industrial complex. It requires trillions of dollars. It requires decades of development. And very few countries can come close to us. Cyber changes the game. So with cyber, you no longer have to cross a border. You don't have to have the best military. The English Channel was 21 miles at its most narrow point. Taiwan Straits is 7,000 miles at its most narrow point. While it's hard for China to come to Taiwan from a traditional perspective, it is not hard for them to get into their infrastructure. Right. And that's what we're seeing here. Our adversaries are not going to attack us with planes and boats, but they are in our infrastructure, and they're especially in our energy infrastructure. So being resilient, really focusing on secure by design, especially as we think about
these guys are trying to get out of paying me.
Transformation, and as we connect.
Surprise, surprise.
By 2050, we expect the grid to double in size. That simply increases.
Yeah, get different shows on Netflix. That's true.
That we have to secure.
I wonder. I mean, this is amazing as we talk about this transformation, the evolution, and the cybersecurity element. To your point, where our foes don't need to necessarily be on our land to know what's going on. In the meantime, you talked about AI even helping for us in the world of cybersecurity. But I'm also curious how you've gotten into this whole business with energy, cybersecurity, AI. So just with a final thought, leave us with your final thoughts.
Well, like I said, climate is the existential problem that we face, not just as a...
Okay. Don't like that audio. Not very peaceful. I still miss Chop. GME's down 2%. See, down a quarter. Spine just chopped around VWAP. 1.7. Never fully broke my channel there, so I guess I was a little presumptuous on my puts. But presumptuous. Trying to get all technical with what happened. Because of their data feed issue, there is not a time in sales to review the time that your option executed. Yes, I know. I didn't see any time, I just sold it. Because the price was up and you need to honor that. And with the market order, it is going to fill the next available opportunity. And so it does not prevent it from getting filled lower on an incorrect delayed quote at the exchange. They should not fill it if there's nothing to fill. The market was closed. Add into these puts. Oh boy. Not very big position, still pretty small. The setup risk reward here is maybe low a day. Let's see. Slow on the trigger. Gonna sell a couple there. Bouncing back up to VWAP. Testing the break. $11.45. Shouldn't have added. Should have just sold some. It's so quick, man. Still chopping. Dang it. Okay, I closed out a half. It's fun arguing with customer service when trying to trade. Really helps the emotional climate to be the right spot. And a limit order may have potentially filled at that price, but the market order, I'm telling them that contract would have been worth at least 85 cents. But the market order can be filled at any price, especially with the exchange issues. Not getting filled though, because the market was closed. Might be getting back into those puts, we'll see. Or adding back in. You almost had the flush. Twos, come on. Okay, bought some more. Please don't be in a chop anymore. Please. Mista. Come on, Mista lady. We test the lows. Oh. The flush, you just can't find the lever. Closing some of those. Closing the rest. Dang it. Choppy. That's what we're fighting right now. Another channel.
As well.
All right, Jason Ware, Dan Romanoff, thank you both for being with us today. Really appreciate a look there at Microsoft, which is certainly on the upside after its quarterly report. Thanks for being with us. I'm Nicole Catalides, live from the Charles Schwab Impact Conference. I will see you at 2 p.m. Eastern Time for the watch list. In the meantime, keep it right here.
Spy. guy wants to flush. I don't think it belongs to me though, this trade. Not flushing, it's chopping. It's low volume. Liquidity building. Spikes. The price action. It's just on a longer time frame consolidation. This range. I'll wait for a retest the low. Wants to, and then nope. There you go. There it was. Yeah, that's all I had to do. I had to do it right here. You didn't do it. Here you didn't do it. All I was looking for. You just so choppy. Eight king suited.
Purpose, I lead you in. I think this earnings season and the next couple days are going to be about high bars and low bars.
Buy down 1%.
Boeing,
AMC is
very low
flat.
bar set.
Yeah, the stock
right?
had sold off into earnings. Yeah.
Exactly. Google Alphabet, very high bar set.
Yep.
Those earnings are spectacular, except for 22% growth in cloud.
Yep.
Right? Microsoft, really good earnings, but off its highs because of the overall market. The problem is when you're in 3 of the 4 indices, if there's a global sell-off, you're going to get caught in that. Still, Microsoft having a strong day, but we're going to get data in the next couple of days that's going to be intense.
Game changers potentially.
Intense.
Yeah.
A 4 handle on GDP and core year-over-year PC expected to be lower. That's going to be an interesting reaction by the markets to that. But right now, if this is earnings palooza, the power just went out on earnings palooza because these markets are struggling, except for that small sample size, which is the Dow Industrials.
Yeah, Dow definitely outperforming. There's some odd names that are up today. Some healthcare names, Visa, which we mentioned, Travelers on the insurance side. But let's dig into these Microsoft earnings results.
This price action,
Caroline
man.
Woods.
It's so ugly.
Contributor here on the network. Caroline, as Kevin mentioned, pretty good report across the board. Off of its session highs, but you can't fault anything that came out of this report.
Yeah, Microsoft certainly still has some headwinds, obviously, when it comes to PC and that type of thing. But no, this was a very solid report, and it's interesting to really see it moving in quite an opposite direction as Alphabet. Obviously, both beat when it came to earnings expectations, but this was really very much a cloud story, and Microsoft was a standout thanks in large part to artificial intelligence. Just running through the headline numbers, EPS of $2.99, easily topped analyst expectations of $2.65. Overall revenue rose 13% to $56.5 billion. That was above estimates. Analysts were expecting around $54.4 billion. But as I said, the cloud business, Microsoft Azure Cloud, was the standout. The growth rate there in terms of revenue, 29%. Technically a year-over-year decline, but a sequential increase and better than analysts were expecting. About 3 percentage points of that came from artificial intelligence. Also notable, seeing as Microsoft has said they don't expect to see the majority of the impact of AI until later on in the year, so bodes well for the future. And Microsoft hasn't even launched that Copilot product that we've talked quite a bit about. That doesn't come until November 1st, so that's excluding the impact of that, which will be $30 a month per person for businesses. Just to put that into perspective, Alphabet posted 22% year-over-year cloud growth. Still impressive, but below analyst expectations, also a deceleration. And they didn't break down the impact of AI, which I think can also cause some uncertainty. But going back to Microsoft, they also gave a strong outlook for the fiscal second quarter. They expect revenue to be in the range of $60.4 to $60.8 billion. Wall Street was looking for something like $58.7 billion. So better there, of course, driven by strong Azure cloud growth. And then for the second half of the fiscal year, Azure growth should come in at 26 to 27%. With an increasing contribution from artificial intelligence. So AI not the only story at Microsoft, but the biggest story, and it's driving shares higher today. As you said, off the highs, but still up about 2.5% today, up about almost 4% on the week, and almost 7.5% this month. So definitely a standout today, especially amidst a sea of red, except for some randoms, as you had said.
Caroline, is it right to compare these two companies? Because in terms of AI, in terms of their effect on cloud, Microsoft is way ahead of other firms in terms of implementing cloud. Here's the quote by Satya Nadella. "We are using this AI inflection point to redefine our role." Here's the quote by Google. "We are using a judicious investment in AI." So one's got their foot on the gas pedal, one's just dipping their toe in the water, getting in, just starting closer to the beginning of their AI. And here's the real question, Caroline. What does this mean for tomorrow afternoon when the leader in cloud comes out with earnings, Amazon?
You know, it's hard to say that Alphabet is just dipping their toe in. I just don't think that they've been as clear in terms of what they're actually doing, and they haven't necessarily broken out the impact that they're seeing. We had said the 3 percentage points from Microsoft. We didn't see that from Alphabet, and I think that that could cause some uncertainty, but it's not to say that they aren't necessarily working in that. But yes, you look at Microsoft's CapEx, it jumped 70% from a year earlier to $11.2 billion. So it's clear that they're investing in AI, and it's definitely starting to impact, have an impact, and it will likely continue to do so. I think that, in terms of Amazon's results, it's hard to say because also the expectations were different heading into these results. Microsoft was the outperformer really to start.
Oh, there you go, Spy. Look at you.
Off for a bit, and so the bar could be
Woke
higher
up.
for a company
New
like
low on the day.
Alphabet or like Amazon. So, that's just my safe way of saying it's anyone's guess, but it will definitely be a part of the conversation.
There it was.
I think the overall market can kind of thank Microsoft, because if Microsoft was down at all, I think we'd be in for some more pain across the board as far as the overall equity market. Great rundown here. Thanks to Caroline Wood, Senior Markets Correspondent here, breaking down the Microsoft earnings. But now let's bring in Nick Theodorakis, Managing Director of Market and Investment Risk at Charles Schwab. Nick, I wanted to kind of get your take here. We had some weakness here in equities, rising interest rates being one of the caveats here that's causing a little bit of pain. What are you seeing here in markets?
Guys, there's a whole confluence of issues out there kind of working against stocks.
Geez, I got nothing.
Touched on a few of them. I really like what Kev said, about kind of the high bars and low bars, because even companies that are sort of coming in a little bit mixed or getting beat up. So if you don't really beat
Pocket kings. My gosh, pocket queens, pocket fours.
pretty decent amount,
Everybody but thanks. Enjoy all my chips,
there's
guys.
just no appetite for
Everybody but me had something.
for that type of performance right now. I mean, people want to see
Yes,
strong
this is a
balance
great
sheets.
punt hand.
People want to see expanding revenues. They want to see
Big
expanding
punt.
gross and net margins. There's a pretty high standard right now to be
That guy's
invested in the
gone.
stock. And
What a chump.
kind of made the point
Just
already.
took all my chips and bailed.
52-week lows. With
Yeah, inverted cup and
so
handle,
high,
exactly.
It's just very little room for error with equities right now. You're still going to be able to stock pick, I think, and you're going to be able to hunt and peck.
Yeah,
and
we
find
just hit low of the day,
things
so
that
that's
are
your inverse
truly
cup.
value in this
See if we get a
environment.
handle to short.
But some of these huge
But we're
names
still
that
stuck in
we're
this chops.
talking
Could just be a
about,
double bottom.
Nvidia's a month out, right? What are they going to bring to the AI trade? And what are these stocks going to do on their earnings? But a lot of the other names
We're talking about on the hourly?
just
Yep.
sort of on the fringe of these
Another
new
one there too.
technologies or not participating.
But we
right?
just
Really
keep projecting
have
that same high, so
pretty big
keeps
bar to
making
beat.
inverse
You're just
cups,
not
keeps making normal
seeing,
cups. Have to
sort of
break
the
out of
safe
the
haven
break out of the
trades
range.
do that well in the equity space. You're not seeing kind of the classic consumer trades kind of step up and do well. So a little bit nervous.
Pocket
there,
aces loses to pocket
just given
sixes.
the level of
Right
selling that we've
on.
seen. Yes, we had a couple of days bounce back, but I think earnings driving some of this, but definitely yields creeping back up. And if we ultimately get a pause and then
Just that same
one more
guy?
hike, and the Fed can
Think
kind of
so.
confirm that,
Just
maybe
went
we get some
deposited that.
stability, but I just think this higher for longer is really sinking in, and based on how high these
Deposit all
rates
my
are,
chips.
the people just have a very, very high expectation for what they need out of an equity investment right now to keep it, and it's got jitters out there across the board. And then you throw in sort of the global conflicts that are going on. We don't talk as much about the Ukraine situation anymore, but we got two wars going on, and with the potential to escalate, in the Middle East. Yes, oil's come off. Yes, that feels like it's pulled back a little bit there in terms of the kind of the fever pitch. But nobody wants to have these longer term investments. I think going into the weekends and that with news breaking. So I think it's just a very jittery market. VIX sort of reflecting that, up today, but not at some level that's just sort of unheard of, right? So I think there's potentially more volatility in equities and in the bond market as well, just based on all the jitters out there globally.
One of the major indices I kind of wanted to talk about was small caps.
Yeah.
I know we're talking a lot about earnings and stuff like this, but if we can get maybe a one-year chart up of RUT, the Russell 2000 index, the small caps underperforming, Kevin, down over 5% so far this year. It's hitting basically 3-year lows as we speak. Now, when you look at this historically, I've always looked at the Russell as sometimes that outlier that can influence the overall market. Do equity, the S&P 500, which is up 10% this year, does that play catch up to the downside? Does NASDAQ still up? NASDAQ 100 still up 34% this year. Do these play catch up to the Russell, or is this one of those things where maybe it's oversold a little bit? You got RSI levels really low. That hey, maybe it's a springboard that might right the ship as far as the overall equity market goes.
Well, it's the age-old divergence-convergence discussion, right? Which is coming back to which?
Pairs trade potential. Who knows?
Exactly. Well, I mean, one of them's going to move towards the other. History tells you they'll move towards each other eventually, back into that correlation. But the one great thing about the Russell is it's domestic, right? It's a massive sample size, dwarfing
Low
all
there
the
on
other
SPY.
indices. So it's a really good look at the economy, but the question always has been with the Russell, who's following who?
Right.
Right? Is it
I was in and out of puts so often here.
or is the rest
Just
of the
so
market
much
coming
chop.
down to the
That
Russell?
sucked.
I'll let you know if I knew that answer.
And still, we're still in that.
Knowledge to have, but
We're still
I
in
don't.
that chop.
Right, that
Ugly
divergence
chop.
between the S&P 500, which is, hanging on to this
Maybe not now,
4,200
since we've
level.
completed that inverse cup.
At a
Maybe it's
key
actually started to do
inflection
something.
point,
But
I think,
volume's
near that
low.
200-day
It seems like it's just
moving
waiting on
average. And then the
tomorrow's
Russell
data.
2000 hanging out around 1658 at this
So
point.
buy 3 Russell, sell 1 SPX.
A lot of people used
Boom.
to trade that way.
Well, you could theoretically, but there's some risk there.
There's a lot
but
of
there's
risk
a risk-defined way you could probably do that.
Yeah.
Give me an hour, I'll come back. I'll run out to my desk, I'll come back with the trade.
But I think it's an interesting indice to look at this point, Nick, just due to the fact that it's severely underperformed. Does that equate to as Kevin mentioned, Russell is highly domestic based, right? Small to mid-sized companies. Is that, an outlier, not an outlier, but a canary in the coal mine for the overall market and the strength that we've seen in some of the big cap names? But moving on here, Nick, we had new home sales, pretty positive numbers here. Mortgage apps are down about 1% in composite numbers. We saw a jump in refis, but this rise in rates, Nick, where we've got the 10-year back above 4.9% today, is causing or is a thorn in the side of the equity market at this point.
Yeah, and you can tie that into the Russell topic too, right? I mean, you look at real estate, and there is a large real estate component to the Russell, as well as other financials, and it's just a tough trade, right? I mean, the home builders and the new home sales, existing home sales, all these numbers, it's such a supply side issue right now that I don't know that we're getting the full picture. But I was surprised to see refis up. I guess rates dipped a little bit, last, I'm not sure who's refining right now, and to see an uptick in that number was kind of surprising. But there's just not supply, guys, right? I mean, you see what's going on in the single family kind of environment. Even multifamily, right? Units are hard to build right now. Things are still expensive. Doing this year versus last year or 2 years ago, it's just really, really difficult. Here in Chicago, you're hearing there's a office space being converted to apartments, and they're trying to solve some of this problem, but it is a supply side issue first and foremost. So I think these numbers are a little bit jaded, or maybe a lot bit jaded, and continue to be, because people that have a 2-3% mortgage just aren't selling, right? And you're not going to go and if your financial situation hasn't really been significantly upgraded, you're not going to get out of that to go buy a more expensive house at 2 or 3 times the mortgage that you have now. It's just there's less supply than ever by a lot of those measures. So that's what will happen when these mortgages come up, these shorter term mortgages, the ARMs, when some of these leases come up. I think there's a longer term story here we have to keep a really close eye on. And again, tying it kind of to the Russell and the financials there. Russell does a lot of times what the financials do. A lot of these banks, small, medium, and large, are setting aside more provisions for credit losses. So they're admitting that this hasn't happened yet, but it's likely that in their minds, from a kind of analysis perspective, that loan defaults, mortgages, and otherwise are going to go up. So I think when you start to see that happening, credit cards and mortgages, right, keep a close eye on those. I think in that sense, the Russell could be a leading indicator if this sort of mortgage and credit card rollover situation does get worse. Look, contrast that with Visa, right? They're not taking credit risk. Their payment processing is through the roof. So if they had a really nice quarter, and if that holds up, right, people are spending more on cars, they're financing more with debt, right? That's pretty great for Visa and MasterCard, but it does sort of tell that same story that if credit spending is on the rise, and wireless transactions are on the rise, or I'm sorry, cashless transactions are on the rise, it all kind of goes towards people putting on more expensive debt and eventually having to finance that. And I think when that comes to roost is where we find out, can we handle this, or is there a bigger problem out there?
Inkling that we see a crack in the jobs market anytime soon, which we haven't yet. That's when that starts to come down the pipeline.
And we've been waiting for that for a while.
Yeah, I think the Fed has too.
Yeah.
Jerome Powell might have a comment on that also.
That's
all right,
true.
guys, let's take a quick break here. When we come back, we're going to talk another one of the big tech names that reports this week. That's Meta Platforms. Tech giant seen a stock rise about 155% so far this year. Expectations elevated. Watch out for this one. Fast Markets coming right back.
This guy. I'm telling him the price of what SPY was when I opened it, when I closed it. He says that doesn't necessarily mean the option would have been trading 8 cents higher. Dude. Now he's schooling me on how option pricing works. I'm trying to get credited like $20 or something ridiculous just out of principle, and I'm having to argue with this guy about it. I don't even know what it is. I just gave him a number that it probably would have been valued at when I closed that contract, because they're saying I closed it for the same price I opened it, or when I filled it, because the market was closed. They shouldn't have filled. The market was closed, option market, but they closed it. It's infinite liquidity. Okay. But they should have credited me the price that it was when it resumed, at least. They didn't. Did you hear my mechanical keyboard? That's great. Need my chips back from this guy. Queen ace. Oh my gosh, nice kicker, man. What a joke. Okay.
Upside and the downside, using that expected move to kind of pinpoint those max losses in the break even. So a little bit skewed to the downside. Strike wise, you know, it's not a very directional trade, guys. Right? I mean, you're looking for, you know, staying within the range. A slight, you know, underperformance of the volatility would be great. And I think that's a possibility from what we've seen from the big tech names so far. You know, even if they're beating on the top and bottom line, if guidance isn't great, they're underperforming to the upside. And you know, if they come in okay, just because they're the stalwarts, they've seemed to underperform to the downside a little bit. So a fairly large move priced in, historically speaking. So just looking for, you know, range bound trade on earnings, you know, using that expected price move.
Yep. Let's break this one down. October 27th.
Nice, Mr. Invest.
Weekly series, selling the
even for the homies.
Call, buying the 335 call, and then on the put side, selling the 275 put.
Yeah, I don't want to try and play the double bottom. Time in the bottom. Oh wait.
Bearish, short iron.
Oh wait till we're out of this.
$2 credit, $300 in risk.
Liquidity
That's above
building.
335 or below 270. Kevin, you're collecting quite a bit of option
So
premium.
it does
extra, you know, that
fill the gap to the
standard
upside. I
deviation move to
won't
the
catch
upside.
all of
It's
it from
right
right
on
here,
there
which,
at the
oh
short
my
330,
gosh, this is my
strike.
turn.
Then you've got an extra $5
Which
on the
I,
downside. So this is a neutral
fine with.
strategy. Give me your thoughts.
It's a big expected move in Meta, and you notice Nick's extremely wide and still collected $2 of credit. So, you know, I think the street, the overall community is looking for a big move. This takes advantage of that anticipation. You've got wide goalposts, but this could move.
Maybe I have to talk to a manager about this.
You've got a nice risk-return level here.
This person I'm chatting with doesn't know a whole lot.
Probably going to move.
They know some,
you
but
might be white-knuckling this one for the next couple days.
Right, and if you look at it, the short 275 put, that's about an 80% probability.
Yeah, I mean,
AMC's up 2%.
Finishing out of the money. The short 330 call, still about 78.5% probability that it'll be out of the money. So you're getting good probabilities of success, but you need it less than that 1 standard deviation on the upside, and maybe at that standard deviation move or less in this neutral strategy. Okay, good look at the short iron condor going into earnings with elevated implied volatility going into that report, allowing you to collect more.
Nice, we had another setup for a trade today.
Strategy.
Still plenty of day left. We can still get it.
Us breaking down markets and meta platforms. But coming up after the break, Landon Swan from Likefolio is going to join us.
Sketched out through here.
UPS. This stock's hitting 3-year lows going into earnings. What a year this one's had in a turnaround as FedEx
flush.
outperforms its competitor in this space. Fast Market's coming right back.
Oh, that a nice put there. The low of day. I was trying to get it. It was just so choppy the whole way down. Nine king off. Great hand. Of course it gets two pair. Fine, because you're taking it from this guy who took all my chips. The other guy that took my chips just bailed. Took like 10 million and just left the table. Guy's always got a raise. Setting up for a straight. By breaking it to the upside. Breaking that channel. Look for a candle close. I want to jump in on the chop. Looking for puts actually here too. Okay.
Stark. I mean, we're talking about, about 18% in the last 9 months on the stock for UPS selling off, and FedEx is up about 25% in that same time. So the data that we have does not support this very low
old guy
price.
left,
We
huh?
think it's oversold at this point. We know that, costs are up, labor costs are going up 9 or 10% this year, but they've also increased rates to match, and the rate hikes are actually competitive or in line with what FedEx is doing. So I don't think they're going to lose a lot of business to FedEx on that. And they talked about how they're focusing on automation and reducing part-time labor in their sorting facilities. So, as automation becomes more and more prevalent, they're going to save money there. I think that, long story short, I think it is oversold, and this is a good opportunity to pick up some shares. Now, I don't think that they're going to blow out earnings. We don't have any data that says that anything like that's coming. We're kind of neutral on the earnings report itself. I think it could be an earnings report where they say, hey, things are kind of going okay, and investors realize, wow, look at the price. Hold on, dividends now at 4%. maybe this is a little bit oversold. So I could see a bounce on that, but I don't see them coming out and shocking everyone with huge numbers. So I'm not taking a position going
Let's
into
go.
earnings, but if they're flat or down on earnings, I think it's a definite good opportunity to pick up shares for a longer term position.
Landon, management lowered their full year guidance for earnings and revenue, and they lowered it not a little. They lowered it substantial. And their better, not bigger theme that they have going is working. Their average price per package improved, but they couldn't overcome the big drop in volumes that they saw, domestic and international. But believe me, I'm starting out negative. I'm going to turn this to the upside here in a minute. Landon, this company doing the things they're doing, getting ready for this cyclical upturn, are probably going to come out of this pretty strong when this all turns. And this business is cyclical. It will turn, and they'll be well positioned when that happened. August of 2020 was the last time the stock was up here. So it basically took the entire pandemic and wiped it out in one big down move, Landon.
Yeah, it's a lot. I mean, to think that this company is the same value that it was 3 years ago, it's tough. I mean, I agree. I understand that they lowered guidance, and there is a low bar going into the holiday season. Just like I said, it's a weak consumer right now, at least when it comes to items that you would have shipped. And I think that that's kind of priced in. I think a lot of things are really, really priced in and potentially overly priced in, and that's why the stock is so low. I'll be surprised if there's news that comes out on this earnings report that sends the shares tumbling even lower, because it seems like everything that could be bad has been priced in, it's been announced, it's been figured into the stock price. And now, in my opinion, it's going to be the bleeding is stopping, or this isn't so bad type of report. Whether or not that sends the stock, soaring off on earnings, probably not. Probably a little bit flat, maybe a slight bump up. But anything if the report comes in as expected, and for some reason the shares would sell off, then I would definitely be picking up shares. I don't think they will. I think that we're looking at a pretty low point for this stock right now.
I think. It was shocking to me when I actually looked at this chart, so it's not surprising to see that. But we'll have a chart on this in a little bit later. But Landon, thanks for the data. Appreciate it.
Thanks, guys. Take care.
All right, that's Landon Swan, co-founder at Likefolio, breaking down the data for
picking
us
up some
here on
puts
UPS.
there.
I mean, Kev, we talk about UPS probably every quarter, along with FedEx. And remember, just about a year and a half ago, 2 years ago, was when FedEx was just getting hammered. And UPS was outperforming.
I don't like buying puts near the lows like this, but if we do come down, it could be a pretty big down day.
Unscathed, but
and then the price tag came out.
And the price tag came out for 330,000 employees. That weighs on
What's
margins.
gone low
Now,
can
this
always
is one
go
of those,
lower.
Companies that,
Vice versa.
because of it's a duopoly almost, minus Amazon, that they can raise prices every year, and they do, right, based on their costs going up. But if we've got a chart on it, I'm not sure if we've got it yet, but I wanted to take a look at a 3-year, one-day chart of laying over UPS and FedEx.
Yeah.
It's at the widest divergence that we've seen in a while.
Yeah, remember when we had discussion about 35 minutes ago, low bar, high bar?
Yeah.
Low bar
right
here. And so if you think that this economy is cyclical, and if you think
maybe should be trading tomorrow's contracts, I don't know.
Structural
12:30
improvements during this down period to get themselves ready for when the economy turns back up, then this company, Tom, here's the numbers. 12.7 PE, 4.4% dividend. Now, if a company's unsuccessful, the dividend could come under threat, but they don't seem like but we never know on dividend. You have to be ready for that. Now, let's have some fun with this, and here's a way to attack this using the stock and not using the stock, Tom. So I came with 2 paper money trades today, 2 of them though. One, buy the stock, right? And then create a hybrid butterfly by selling 2 of the Act 27 155 calls and buying 1 of the Act 27 160 calls. That's the first one. Buying the stock. Why? Well, because you've got a north of 4% dividend. So the stock is attractive there from a dividend perspective. And it's oversold, and it's if you think it's overdone. Now, there's the first graph with the stock. Now, that risk looks different than the next one we'll put up because you're long the stock. You've got theoretical risk down to 0, but you're collecting theta on this name, and you have a chance to capture the dividend if it's paid out. Now, let's go to the next one. If you didn't want to use a stock, because the price on that is about just under $15,000, right? If you sell that the 2x1 for $1.60, pay $146.57 where it's trading, just under 14,000, or it's right under $14,500. Now, let's go to the.
I mean, on the whole day, we made a Head and Shoulders.
And that's a different one.
Head, shoulder, shoulder.
Let's say you go out to the November expiration, and you buy.
We do flush here.
Basically, a stock replacement
that's not looking
idea.
good.
You buy the Nov 145 call, right about a 70
rally to the
delta,
top of this channel.
right?
That changes a lot.
And then you do the same thing. Sell 2 of the OC 155s, buy 1 of the OC 60s in the OC 27th. Now,
I don't think that's a
kind of
support line that we'll come back from.
line in a butterfly. So it's got less risk. The risk is you're only spending about, if you do that,
There it
around
starts to go.
$450 on that. So there's less risk, but you don't get the
Close some
dividend.
at the bottom of this channel.
The difference is when you're using
Low on the
options,
day.
you don't get the dividend. So there's one way to do an unbalanced butterfly where you, with a diagonal, where you're buying the further out, selling the 155.
416 expiring tomorrow.
You could do that
That
with
probably
the
could
stock,
get in tomorrow's.
or you can do it with
I
a
got some dailies,
70
whatever.
delta call. Both give you
I'm a
that upside
maniac.
potential. One has a little
Maniac.
more risk than the other. One has the dividend. So the trade-offs here are all over the place. In this,
and I think the risk profile we got, Kevin, is the one using
that's with the stock.
With
right.
the stock.
You can tell by how it drops.
I actually got
off.
418s too. I didn't get 419s.
As an example, trade here that Kevin brought us.
Crazy.
For every 100 shares of stock you buy, you go out to that.
No, I mean the reward to go
October
down
27
like.
cycle. You sell 2 of the 155 strike calls.
Do have to break
buy
this channel
1 of
also,
the
but
160
still.
strike calls. Now we've got a price here as a package. You have to do these separate. On a trading platform.
And you have to wake up too with volume. I mean, the thing's been just
145.85. Now,
low volume chop last this whole week, really.
It's trading closer to 145 as a package.
Just starting to look more promising now. It's volume picking up here.
Price you pay for that.
For some price action.
We got 145.85, but you can see there from Kevin's example trade here, the break even there. You've got that basically that long stock, so you've got risk all the way down to 0, nearly $15,000 in risk on that particular position. Because of the long stock, you'll get to collect the dividend if it gets paid out. So that's that yield that Kevin talked about. You have some assignment risk on your 2 short 155 strike calls over the next 2 days into expiration on that also. But a good look at a multi strategy where you're buying shares of stock, which is a bullish type of trade. And then selling a 2x1, which is neutral to slightly bearish on that one, but it offsets some of the costs that you have on buying the shares. So it's creating yield on that also with higher
this lower channel needs to bust through.
Butterfly. One gives you about 60 deltas. One gives you about 16 deltas. So
you can see that's definitely some support.
To get a different idea.
Volume picking up on the bounce too.
Yeah, even above that 160
close
strike,
more.
because you're long the shares. That offsets some of the costs from the levels that you're at now. You're still going to be profitable on that nearly $400 to the upside with the kicker at or near that short 155 strike on that. So good look at a multi-leg spread here on this UPS heading into earnings. With the stock, RSI at 27, Kevin, oversold at this point, going into earnings with expectations. The bar set really low here on UPS. All right, coming up after the break, we're going to take a look at MasterCard. Stock of the credit card giant has seen tepid gains so far this year. Reports earnings tomorrow morning. Visa's up today after their earnings. We'll see how MasterCard stacks up. Fast Market's coming right back.
More RSI divergence is there. I should just close them all. Got back green on the day. It's not like I'd re-enter at that price. Might as well close them. Just have buying power in the back of my head, which I need to get rid of. Get rid of that in my head. Everybody's still in this. Wow. This guy have what? Jack Queen? Missed the straight. You missed the straight too. Too much out there. There's a flush out there. There's a straight. Trips. Flush, yeah. Plus 4%. Ticket to Bollywood. Still very early. SPY could still make big moves either way. 1248. We could still see a gap fill up here. Or we could see a new low, like low. Time. What? 418 is this level? Already there, 417. There's our next horizontal support. Or 14. Yeah, could see that today. Wild thing. You make my heart sing. Wild thing.
They've got the orders. They got to fix all the production issues at this point.
Bearish.
All right, thanks to Kevin Green, senior markets correspondent here.
Yeah.
Boeing earnings.
Sense.
We'll continue to watch that one. Now let's bring in George Tillis, senior markets correspondent here on the network. George, we're talking MasterCard. The stock up about 10-11% so far this year. Expectations.
Once they fixed it,
it was a little bit, but
no longer what we thought it was.
After their earnings, it seems like people are still swiping out there.
Well, they are, and I think when you think about Visa and MasterCard, these two companies are basically behemoths when it comes down to, total payment volume and transactions volume. If you look at
Visa, effectively, it's over $3 trillion in global payment volume. And you think on MasterCard, they're number 2 at about $2.32 trillion. These are huge numbers for these companies. Now, if you look at their respective businesses, they're not finance companies. They don't have balance sheet risk. They don't have the lending risk that essentially companies like Discover or Capital One Finance do. These are essentially transaction businesses, and they're technology companies that are extremely profitable. If you look at, for instance, MasterCard's net income, it's about 44% of sales. It's an extremely profitable company. It's got steady revenue growth in the double digits, as well as EBITDA growth that's about 400 basis points higher than sales. If you look at the numbers they're expected to report, they're gradually increasing. $3.21 is the estimate. That's about 20% higher than last year compared to $2.68. These are, again, the numbers they're expected to report, as well as about $6.53 billion in total revenue, higher by 13% compared to $5.76 from the same quarter last year. I think if these companies are just steady growers. Now, there is some, of course, pullback based upon market conditions. But if you look at the revenue growth estimates for MasterCard, they're still expecting 14% sales and about 17.5% EBITDA growth. And this company just generates a tremendous amount of profits. And I think this is one of the reasons why these companies, both Visa and MasterCard, are really stalwart investments from an institutional standpoint, and considering also market cap at around $365 billion. These are not small companies.
George, the amazing thing to me is, with as big as these companies are, the world still likes to pay a lot in cash. So there's still a lot of growth opportunities for these companies. That said, this Credit Card Competition Act of 23, did you see that? I mean, the government wants people to use others. They want to spread out some of the wealth here. Is that a threat to some of these companies, Visa and MasterCard, frankly?
Well, that's the thing. I mean, you have to think about the network that this company provides.
Pal speaks after hours.
Capital One, for instance, a credit card, they use either Visa or MasterCard.
GME, Funko. Yeah, I don't know if they're going to go after Funko or Newegg or.
Companies. I mean, they're
but I imagine they're going to acquire something. That was like 3 earnings ago, though. They said they were going to buy a used company.
So again, you know, there's always
they've been very slow, very slow with their growth.
To some capacity, but at the same time, you know, you have to create a better and faster network.
Their NFT and whole crypto exposure came in a very bad time.
So therefore, as of right now, it looks like these two companies, Visa and MasterCard, really still maintain a durable competitive advantage.
All right, great backdrop here for us, George. We're going to do an example trade. That's George Tillis joining us, breaking down MasterCard. Kevin, option market's pricing in about $11.50 move in the shares either way. Muted move out of Visa, and if you overlay these charts, they're pretty similar.
And a lot of that news is already out, so you're trading not the first one, but the second one.
Right. So I looked at a strategy that takes advantage of maybe a muted move that we saw
in
Visa.
Sell when these contracts get to move. Watch.
A good way to look at how higher implied volatility offers an opportunity here.
It go.
I looked at a double diagonal. We call this one a strangle straddle swap, where I'm going to sell in the
strangle straddle swap.
October 27th weekly series that expires in just 2 days. I'm going to sell
the
390 call and the 390 put. So there's your short straddle. And then against that, because I want to stay risk defined,
it's moving the wrong way, though.
The November 3rd weekly series that expires in 9 days. Buy the 405 strike call on the upside, and then buy the 375 strike put on the downside. You're collecting roughly about a $7.60 credit on this one, Kevin. But you can see there your break-evens near about 404 on the upside and near 376 on the downside. And you're selling a higher implied volatility in the straddle that you're selling in the near-term options, and buying a strangle for implied volatility that's lower.
Yeah, you're selling a front expiration straddle, but you got long Vega, because the wings you're buying are out a week. So that gives you long Vega. It's titled a double diagonal, and it is. It's 2 short diagonals that you're doing. They just have the same strike. That's why that comes to a peak. So yeah, you're collecting theta. You just need less than, you want a small move. You want it as close to 390 as possible. Anything over, $7.50 on either side, and you've got risk.
Yeah, 760 credit, so that takes your risk. It's $15 wide. It's about $740 per spread, and that's way outside the ranges here. That would be below 375.
Market's still so melty.
So you're looking for a muted move with this, but at the same time, Kev, as you get closer to expiration, if this stock's still in that at or near that 390 strike, you have the opportunity to buy those back, sell the next one, and create a short iron butterfly in the November 3rd weekly cycle. So you have that option if the market's open, liquidity is provided, but a good look at a neutral strategy taking advantage of that divergence.
New low there on SPY.
All right, Kev, that's going to do it for you and I today here on Fast Market, but stick around right here on the Schwab Network.
Stick
Next
around.
Investing's coming up.
I'm just closing one by one to coax it into dropping. Do it. I guess it is middle of the day. Middle of the day chop. It's just at such a vital level right here. Odd place to be right now. Jump. Five. You actually had the flush? You had fives? Getting so unlucky. I'm closing another one. I don't understand. Didn't I get these right here at this break? Oh, they are up more. Okay.
Now, you know, is this really Alphabet? You know, is Alphabet down 8-9% enough to essentially
I hate watching this market. I want to just get further away from my cost basis so I can just put a stop on it.
You don't see companies the size
looking
of
at this
Alphabet
trash.
move this much all that frequently. For a company that's somewhere in the $1.5 trillion range to be moving 8%, you're essentially talking, I like to do this, you're essentially talking about Starbucks just being eliminated from existence in terms of market cap. And I like to think of Starbucks as a pretty big company. That goes into perspective just how much damage to Alphabet's stock value 8% really is in terms of real dollars.
That is such a good way to frame it because it is. It's the 4th largest company in the world as far as its market cap goes. So a 9% move feels unprecedented. And we'll be diving more into those results later on in this show because I have the argument I didn't think they were that bad. I think the sell-off is perhaps a little bit overdone. But today, the earnings we're seeing released, it's a much more telling market of some of these results because yesterday it was like everything was in the green, even if the companies posted some lackluster earnings. So we'll start things off with our upvote and downvote segment, and then we'll go into that Alphabet
Okay, I close the rest.
on for FOMO. We'll also be previewing Mattel.
I guess I'll get back in at some point. Maybe we'll see. This price action just
and then we'll recap
absolutely
Snap,
sucks.
which did see some optimistic results in their 3rd quarter, but shares are also lower on the session.
Yeah, the mighty Snap down 3.5%.
I really don't like
George will help us break that down.
shorting the lows either.
Which is now really under 10 for Snap.
I didn't find up here just that crazy job.
To worsen for
Got
the
me.
social media camera company that is Snap.
But
Let's do
glad I
upvote,
took this
downvote,
trade.
endorsements,
Helped me get back to
recommendations, good mix,
close to
and
break
some
even.
previews, some recaps as well. Let's start with the preview and
break
arguably
even.
where focus will be in, let's say, 3 hours time from now.
And
there you
that's all
go.
things Meta platforms. And actually, watching Snap report yesterday after the close, I would have said this was good sentiment for Meta, but now
They just had to close.
things
That
are a little bit
forced
mixed
it.
here as Mark
Forced its
Zuckerberg
hand.
has really touted their investments in AI, been focusing, of course, on this year of efficiency, which has led to their over 150% rally so far this year. Now, they also have really boosted margins, reduced some of their costs. We've seen about 20,000 job cuts since the last year, but the real story is going to be the rebound and good old-fashioned advertising. Advertising does still account for most of their overall revenue, driven by this expected 21% growth in their ad revenue. The street is projecting that Meta will post sales of around $33.5 billion. That would be up 21% on a year-over-year basis. Profits also expected to climb pretty substantially, expected at around $3.62 a share, roughly. Now,
New low of the day there on SPY. It literally just took me closing.
$34.5 billion. But in reporting the results, they did recently, at least in the last quarter, slash their full year 2023 capex budgets to range between 27 and 30 billion.
There's your little tiny flush.
Some savings in their non-AI servers, among other things. They do expect that capex will grow in 2024 from this fiscal year, driven by, again, some of their investments in their growing portfolio of
As far as
AI.
larger,
but they did warn of losses in their
larger
reality
table
labs
is not
unit. Think all
treating
things
me very well.
headsets, that area
I was
of
up
their
quite a bit
business
and then
continues to lose
got just
money. And
slapped.
I will say, Alex, Tom and I were discussing this name earlier on Futures
And those people
today,
left.
and we were like, the less
Took
he
all my
can
chips.
mention that whole segment, the better.
Especially if the numbers just keep mounting in terms of losses. When you start thinking about user growth, Jenny, that was a bright spot objectively, I think, in the Snap report. And there's always these trying to garner some info from Snap and then extrapolate that on the Meta. Meta just doesn't have that growth potential left. It can't grow 12% anymore. It's too big in terms of users. So just because Snap's users are growing doesn't necessarily mean Meta's are. But the same point that just because Snap is having trouble selling ads and the effectiveness of its pricing doesn't necessarily mean Meta's going to have that same problem. I would say within Alphabet, something we'll talk about, the ad story was actually a pretty good one. And so, granted, Alphabet, Meta, different, selling different types of ads. Just because Snap's struggling, I don't necessarily think Meta is, but Snap can't take away the fact that they've spent all this money on the metaverse and they can only cut
Below there on
costs
SPY,
and
it's
efficiency
finally
for
flushing.
so long before it's just business as usual.
And we've said before, very different companies. I mean, as far as like market cap, scale, reach, it's amazing that Meta actually is forecasting around 6% growth in its Asia Pacific region. So it's trying to find now pockets of growth it can expand into outside of the US where we're fairly saturated, because my argument is like, come on, Facebook, namesake Facebook, how much is that stop really growing at this point. That is to me like MySpace, which I actually might take MySpace over Facebook, but that to me is not their growth engine anymore. It's Instagram, it's WhatsApp, it's some of these apps that are just more globally renowned at the moment, at least as far as what I can see. But our next name here is a clear bright spot, and that is Microsoft. I would have said to you yesterday when we got these results, Alex, if this name didn't open higher, I would have lost my mind, because that would have been the most confusing to me of all time. Shares are up 2%. It's not a huge move to the upside, but amid this choppy macro environment, this company is showing that it's still thriving. I mean, they delivered a clear beat on all key metrics yesterday afternoon, resulting in clear applause from the street over the state of its Azure cloud computing business, which performed better than feared as growth re-accelerated for the first time now in several quarters. Many were encouraged by their talks of these planned sequential increases in CapEx during their fiscal 2024. And Bernstein was saying this is a good indicator that Microsoft has taken the AI mantle from Alphabet, and that Azure could become a bigger and more important hyperscale provider than even AWS, which has been chipping away at its market share in the cloud world. They said if this trend continues, AI will be a very large driver of the size of Azure's long-term revenue and will require reevaluation of how big even that segment could be. The fact that Microsoft is even willing to provide now an early glimpse into the second half of their fiscal year for Azure, predicting about 26% growth in constant currency, is a sign that the business is already on stronger footing than it was, say, a year ago. Their commentary on AI trends also did point to some real demand, which is sustained, the analysts say, this double-digit organic revenue growth for the long term. So this name, no surprise, very loved by analysts. I saw nothing but positive commentary today, and no wonder we have 49 buys out of 55 analysts covering Microsoft.
This is a company that essentially has 3 business units that on their own could essentially be mega cap tech firms, from intelligent cloud to, business and productivity processes, then the more hardware focused side of their business. All of these things have been clicking on full cylinders for the better part of the last half decade, and they continue to do that. Throw in there kind of the cherry on top of its association with OpenAI and ChatGPT. It's almost like they can't do any wrong right now. Now, granted, the stocks performed really, really nicely, especially for a company the size of Microsoft. So there's always that feeling of how much of it's already priced in, but a healthy rally today, and what seems to be a potentially sustainable rally up 2.5%. It's not like this thing's jumping 10% on a $2 trillion valuation.
Right, and I actually like a modest 2.3% move. I was watching the stock price in real time yesterday, and we initially saw that spike, and then it started to fade a little bit, but glad to see it's clearly been able to hang on, at least as of right now. Our next name today, though, is Boeing, and talk about a name that's been all over the place just in today's session. When I first looked at this name today, we were down about 2%, then it was up over 1%. Now we're down just shy of about 1%. So market doesn't know what to make of these results. They did say they'll deliver fewer 737 MAX aircraft than previously expected this year, as they work through some pretty well-known production flaws,
but
expecting to hand over between around
375
and 400 of that plane this year,
done
from previous estimates of around 400 to 450. They did maintain their expectations, though, for 2023 free cash flow of around $3 to $5 billion, despite these production headaches. The 737 problems do stem from some of these misdrilled holes in their fuselages, which are produced by, of course, Spirit Aerosystems. We've discussed that story pretty heavily, but sales in their overall commercial aircraft unit did rise 25%. We also did see the fact they plan to ramp up the output of their 737 to 38 planes per
look for
month
calls
by
and
this
break this
year's
channel.
end. They reaffirmed their estimate to hand over between 70 and 80 Dreamliners this year.
Still
And they did see revenue that posted a nice 13% jump on a year-over-year basis, while losses per share were worse than the street had feared. So bit of a mixed picture, but for a name like Boeing to see shares down less than 1% feels almost like a win today, Alex.
It really does, and one has to wonder, when do investors in Boeing just lose patience if they haven't already? The stock's still posting massive losses, it seems like, every single quarter, and all these problems that have plagued the company for almost 5-6 years now, it seems, we're really just not moving past them. If it's not one thing, it's another. Boeing, after doing literally nothing wrong for a decade and going straight up, nothing's going its way for the last 5 years.
And their CFO and CEO did somewhat address this, saying that they're going to come back a stronger and better company. But I mean, we've been hearing that for what now, 2-3 years at this point. I do think that investors are running out of that key patience. But our last name today, the worst performer of the group on a year-to-date basis by a sizable margin, that is UPS, which does have its earnings expected out tomorrow morning.
Fine.
And I was very curious about the divergence in performance between UPS and FedEx, because as a consumer, they somewhat fill the same void, right? They both deliver your packages, you hope on time in one piece, but UPS does specialize in domestic ground delivery services. FedEx focuses on these time-sensitive international air freight pieces. So FedEx is up 36% this year. They're incomparable as far as performance goes, but interesting to me was as far as market cap, FedEx is around 2.25 times smaller than UPS. It has a market cap of just shy of 60 billion versus UPS has a market cap of almost 130 billion. I did not know that UPS was that much larger than FedEx. Maybe that
Why
was
didn't you raise
naive
me?
of me to say, but UPS does have their third quarter earnings that have been revised down almost 31%.
I don't think
over
you
the
realized
last
you had
2
Kings.
months. Street is expecting these higher labor costs to have hurt their bottom line performance. The labor
And
deal
he's out.
they inked with the International Brotherhood of Teamsters in August is likely to have resulted in more increased labor costs, while high fuel costs are also likely to weigh on their bottom line. Apart from the adverse effects, though, of some of these labor negotiations they've really handled during this quarter, economic slowdown has also led to supposedly this decline in packages because people are spending less on goods, focusing more on services, the narrative we've been saying all year long. But they have felt the sting of the pandemic boom fade quite well because back, a year, 2 years ago at this point, we saw nothing but high volume for these companies that have now had to readjust. They also had very specifically labor problems they dealt with this quarter, which I can imagine will be mentioned on their earnings call tomorrow morning.
No doubt. And I think an important distinction, too, I actually don't know the amount of employees for both of them, so I don't know which one's bigger necessarily, but I think it's definitely safe to say UPS is more valuable. We talked about this with the airlines not that long ago. American Airlines has the most flights, the most in the fleet, but it borrowed so much money to establish that. It's not the most valuable airline. So key distinction, I think, probably FedEx may be bigger, but it's not as valuable as UPS, no doubt about it. And to your point, it also seems, and we used to have these conversations with Folio, just seems that UPS has a higher customer sentiment, even though you never get to choose. Usually, whatever you're buying something from, they have a relationship with these vendors or these shippers, and you just get your package and you deal with it, whether it comes from Amazon,
Crazy
UPS,
call, man.
FedEx. I just hope it comes.
An all reign above USPS, which is like maybe you'll get your package, maybe you won't. At least UPS and FedEx are somewhat reliable in that regard. But we'll be diving into our upvoted names today, those names that clearly still have yet to report, UPS as well as Meta Platforms, looking at some key technical levels as well as example trades in both of those names.
Yeah, RSI divergence still in the 5-minute. Taking the starter on calls there. Actually, not really a starter, but I'll add to it. Guess it is technically a starter. I'll add on this channel. What we're doing here. Oh, what's going on? Wow. Flopped a full house, aces over kings. Gonna have more chips. We could have bet more. Look at that candle. Oh my goodness. What in volatility? Some news? Looks like news. No data dropped right then. Someone's speaking. Or some news. Picking up some more calls. It was weird. Unlike our big candles before, because the volume just came out of nowhere. What? And then it just reversed. Gosh. Alright, I'm gonna sell some of these. This crazy market. This crazy clown market I can't trade in. Some news is going on. Is it Middle East news? What the heck? It's gotta be.
Here, we've got some potential support in that 300 level. That's an area of particularly heavy trading. You can see on our volume profile study right here, this blue bar graph here. To the upside, Well, 325 represents about where we had our old best close, 325, 326 or so. And our intraday highs were around 330.54. So anywhere between 325 to 331 or so would be a resistance zone. If we do start to clear that area, could be potentially interesting here. But, you know, I think probably a lot of people are more worried about the downside. If we do keep breaking lower below that 300 level, first we've got the old lows right here near 286.79. That was the intraday trowel from that little downward movement here. 275 also stood out to me if things really start to fall apart. That's where we had some highs and another low there. So a lot to digest with this chart.
So 275 to say like 286 to the downside here. Market is pricing in nearly a 26 move in either direction as far as the market maker move. So now in trading this name, we already have an $8, a little bit over an $8 move on the session to the downside, Alex. Say you're looking at Meta and you're thinking this rally is coming to a close, or perhaps just maybe losing its steam, looking to lean into a more bearish example trade.
Yeah, and we talked about it in the first segment. I can get
Let's go
behind
for
the
like gap to the
logic
top
for
side now.
why this is positioned
Do it,
for
SPY.
kind of a sell the rumor, buy the news on
Yeah,
the snap
big day.
report. But Rick talked about the technicals. Things are starting to break down technically, and there's also a good chance too that Meta disappoints as its peer did. So if you're in the camp looking for downside, this is a trade that would benefit from that. Looking at buying a put calendar week over week, centering around that former level of support around 275 that Rick just highlighted there at the end. So what we're looking at here, selling October 27th, buying November 3rd. 125 debit means $125 in risk.
Weird volatility just
a
picking
risk
up there.
profile that we know well or have come to know well. Mountain-like that peaks out right at our strike, which is at 275. So it's bearish because, well, right now the stock trades for around 306, or 304 rather, as it slipped a little bit as we've been talking. It's going to need a downwards move. It doesn't need to perfectly pin that 275, but the nice thing about this strategy, you can customize it to whatever strike best fits your particular individual outlook. So one way to look at it, it's a bearish way to look at it, targeting those former levels that we had seen in recent lows.
And you know what's so interesting to me about this name is there was such a spike in share price earlier this summer when we saw this news of perhaps TikTok going away. It's like, what happened to that? I mean, we need this company to post some big numbers to please the relatively high expectations that have been set forth for Meta platforms. But now to shift gears and look at UPS, which the bar is infinitely lower for this name, just given the fact that we're down about 15% on the year.
Quite a different chart here, really. And I took
That
this
plunge
one
protection
back a little
team waking
further
up.
than 1 year because there's a few points that I wanted to highlight here. You can see kind of, you know, we really started to struggle around earnings back here in April. We had this large gap downward, like a 10% gap down. And it was interesting because we did recover significantly from that point. We never quite closed that gap, though, that formed. So from this point up here, we wound up falling about 24% now, making new yearly lows today. We hit the lows near 146.01, just barely hanging on above that 146 level here. And a couple key areas I wanted to highlight. First, we had this 166 level. That was where we bottomed out several times here. It was where the downtrend started to intensify once we dropped below that level. We also had that old intraday low from all the way back near you, Jenny, in early October near 155 or so. Had a lot of chop around that level, stopped on that price area many times here, ultimately falling even further here. Now, you don't need to be a technician to see that the trend is down in this name. We've got a downward sloping trend line that was breached, and we did move to the sideways, but we kind of resumed that same trajectory after we broke through it. But looking at our moving
Still early, it's
you
only
can see
130.
prices far below all three of them. They're all diverging farther apart. They're all trending lower. So the trend in this case, pretty obviously down, and it seems like it's getting worse actually too.
Right, and that's exactly what I was going to say. It feels like the selling momentum is just steepening here over the last month or so. So RSI, I know, is a bit more complicated than that, but we're looking at it. I can't imagine momentum is super positive.
It's actually even more complicated than usual on the RSI today because we have kind of mixed signals here. So on one hand, we have a little bit of bullish divergence actually, surprisingly, because I would have thought momentum was pretty heavily shifted toward the downside as well. But momentum actually has improved a little bit here despite price making new lows. Now, on the other hand, we've also had repeated crossovers into that oversold area, which is a sign of weakness. On our theoretical third hand, we also have the situation where we are just starting to fall below this trend line here. So 2 of our 3 hands in this case are more bearish here. So the bullish divergence is being invalidated by the break below this trend line. It's very slight still, but we are also once again in the oversold area. So kind of like I said, there's a lot to unpack with this one, but overall, not looking very good still. Once again, looking more bearish than bullish. A little bit of divergence that's been invalidated is not enough to save this one.
You know, actually, you saying that it's not perhaps maybe as bad as we had feared is almost a good sign to me at this point. I would have said that momentum was completely falling off, but now support and resistance ahead of this earnings event. What are you watching?
You know, our moving averages were not a ton of help in determining any kind of support or resistance. In this case, it would be resistance because we've fallen so far below them. At the same time, because we're making new yearly lows, we don't have any real previous price action to go off in the near term here. So I used our old friend standard deviation channels, blue linear regression line of best fit based on closing prices. Then we extrapolate channels, +1, +2, -1, -2 from that point. So it tells us a couple things, whether the stock is closer to a fair value point, which would be our linear regression line, or an extreme level, which would be one of our channels here. We're very close to the -2 channel here, this orange solid line near about 144. That could be a place to start looking for some support. There's no reason it couldn't keep going lower here if earnings disappoint. This is just a potential area based on our own price history where you might see a slowdown, a stall in trend, some support, something like that here. To the upside, well, we've got those old lows to consider near about the 155 level, this choppy area here. We've also got a volume node that formed there, so that could be an area to look for some resistance. There's actually quite a bit going on in that area because we also have our yellow 21-day EMA. We've also got our -1 standard deviation channel, which could be resistance. So anywhere between 153 to 156 would be a definite spot that many traders probably would have their eye on for potential resistance.
Yeah, I think really well put, and clearly, like you said, at 52-week lows or
picked up volatility for whatever reason,
0.2%,
right around 1.
Those lows today. We'll leave it there. Appreciate all of the technical breakdown. Our chart master Rick Ducat.
Still choppy in a small range, but all sorts of volume.
Looking at a little bit more optimism, just given the fact that we are pretty much at our lowest point of the year right now in terms of share price. Walk us through then a more neutral, maybe more optimistic trade in UPS.
Yeah, what have we heard lately? All that we've heard is the economy is stronger than expected. One has to think that would benefit e-commerce and possibly even shipping. Now, when a stock has been downtrending, oftentimes it's difficult to pinpoint just when it will stop downtrending. So in order to make that process slightly more in the favor of the investor, a neutral to bullish strategy, Jenny, can increase that probability of success because, well, your break-even's lower. And so I looked at a strategy, skewed put butterfly. It's a little bit omnidirectional, but really this is a neutral to bullish strategy that seeks for the stock to stop going lower with a break-even that is outside the anticipated market maker move. And so what we're looking at here is buying one of the 141, selling 2 of the 140s, and then defining the risk by buying a 135. Now, granted, the stock has slipped a little bit with the overall market, so these prices may have changed a little bit. But at the time, it was a 50-cent credit. That would correlate to a 138.50 break even. Well, the stock right now is at 146.30 with a $7.50 market maker move. So it's just outside that on the break even, but most importantly, it's risk defined. So you're limited to $350 in risk with this strategy on a max possible profit of 150 if it pins perfectly at that 140 mark. And so when looking at this style of trade, Jenny, I think it's important to note that, yeah, the stock's been under pressure. Yeah, there's possibly reasons to think that maybe it could turn around, but it hasn't yet. So this strategy allows for that cushion in the event that the earnings is still adding more pressure to the downside.
And, you know, if retail sales and some of these economic data points we've gotten over the past quarter are any indicator, perhaps things are not as bad as feared. And the bar is pretty low, which does then set the stage for some interesting earnings out of UPS. But we'll leave it there for this segment. Now, coming up next, we will finally discuss all things Alphabet pacing for its worst day in over a year on what was a pretty massive cloud miss, according to the street. We'll discuss their results more coming up next.
My dad was a hard worker. Used to do side jobs, installing windows, charging something like $100 a window when other guys were charging $400 or $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me, always put the people before the money. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me. Yeah.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week at schwabnetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Schwab Network.
Spotlight the biggest market trends on Trading 360. 11 a.m. Eastern, only on Schwab Network.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. It's time for a look at a developing story with Kevin Green, senior markets correspondent here for the network. So Kevin, we have a lot of Apple news today, raising the prices of their Apple TV. Well, also, this is more exciting to me, revamping their AirPod lineup. Walk us through this.
Yeah, definitely. Let's go with the price changes first. This is going to be effective immediately. They are raising the prices on Apple TV Plus, as well as Apple Arcade and Apple News Plus services here. Now, this is actually going to be very interesting because this is the first time that they've actually raised prices on Apple Arcade and Apple News Plus services here. But we are seeing Apple TV moving from $6.99 to $9.99 per month. We have Apple News Plus going up from $9.99 to $12.99 per month. And then the Apple subscription for Apple TV subscriptions on an annual basis is going to go up from $69 to $99 here. Now, existing subscribers will actually see these new price changes in 30 days, and they will actually also get a notification from Apple regarding these changes. Now, if you have a new renewal that's coming up, your annual renewal, that's when you're going to actually see these price impacts here. But this is just another way for Apple to be able to generate revenue as we continue to see streaming, as well as even the gaming space getting a little bit more expensive when it comes to the cost of content. Now, you also brought up the AirPods. They are going to overhaul their AirPods and really have a new and high-end model with USB-C headphones at this point in time as well to be able to charge them. Now, this is going to be rolled out initially in 2024, and then they're going to have the higher-end new Pro model that's going to be rolled out in 2025. Now, on this news, we did see the stock move to the downside here. Not sure if it's based on this news alone. We do have a lot of macroeconomic data as well as geopolitical news that's really hitting the wire over the last hour or so. So we are seeing the equity markets pull back here a little bit, but not surprising that Apple is increasing these prices as we've seen the same type of reaction or same type of moves when it comes to Netflix and some of these other players in the streaming space as of late.
Yeah, Kevin, at this point I have like price hike fatigue because I'm like, of course, they're raising prices. But the AirPods story is more interesting because, well, I will admit this is the ultimate first world problem right now with the iPhone 15. I have a charger for that, which is the universal charger, but then I still have AirPods and the watch. So I have way too many Apple charges for my liking. So I appreciate the mainstreaming the charging system of those AirPods. Well, we will leave it there. Really great breakdown, Kevin Green, senior markets correspondent for the network. And I have to get Alex, your thoughts on the AirPods story, because I do know that of all of the Apple products in the ecosystem, the AirPods are your favorite.
I think of all products ever created, they might be my favorite thing. Look, I got a line. I don't complain about much, but if they ruin the AirPods, I don't even know. I don't know what I'm going to do. There's no competitor that's even coming close right now. So the words total overhaul of AirPods lineup, it's a little bit worrisome for me.
The only thing that would make them a little bit better is that I feel like they don't stay in your ears that well. But that's
See,
like
maybe
such a
I
minor.
have the weird size ears. They do stay in mine, so that's why I'm like, I finally found something that works.
You know, I think it's a person. I have like earrings. It's my own issue. I think it's still a great product. But now we'll shift gears here and talk all things Alphabet. Alphabet with a monster move to the downside today, down about 9%, which puts it on pace for its worst day in over a year. And I will say that this report seemed strong when we first got these numbers yesterday after the close. Seems like all of the attention was focused on the cloud.
As it typically has been the last few quarters and the last few years in Alphabet, as it's become a more real player and threat to the key members of the cloud world. Think AWS, think Azure. With Microsoft, there has been more scrutiny on Google Cloud, but at some point, we got to tip our cap to just how well they navigate their core businesses despite all these threats from Bing and ChatGPT. Google search seemed to look like it was doing pretty good still.
Yeah, and I will say the timing of their earnings release seemed a little bit ill-fated for the share price because Microsoft reported obviously this really nice quarter as far as its cloud unit growth, re-accelerating for the first time in several quarters. That then starkly contrasts with some of the weakness we saw in Alphabet's cloud segment. I saw a Wedbush analyst that said this owning Alphabet for its cloud business is like rooting for Michael Jordan to play baseball. I loved that analogy. But they actually believe that this sell-off is overdone. And this was an interesting take, I thought. When you look at their Alphabet's cloud unit, it accounts for around 11% of their sales versus the 78% share that they do see in their ad segment, which easily topped third quarter expectations. So to paint a more positive picture here, we did see that the cloud slip up was pretty much their only issue. And I know, like you said, an important one, but we did see they overall did beat on their overall top and bottom line figures. Also, this is the first year of YouTube's $2.5 billion per year contract with the NFL to broadcast the league's out-of-market games. So in their earnings call, leadership really failed to provide much insight on how this pricey Sunday ticket package impacted their financial results. That was, to me, easily the most disappointing. That is such a to me, streaming win right now that just wasn't even addressed. So it can't be having a positive material impact, or else they would have mentioned that.
Well, they do show in their other that the growth exceeds 20% in there. That's being fueled largely by this YouTube TV subscription. Look, the NFL moves the needle. Whether or not you're a football fan or not, it's just objective fact. We saw it with contract negotiations. You see the dollar figures on some of these contracts that they inked. Hey, look, I probably don't have YouTube TV if Sunday NFL Ticket isn't on there. Now, I'm glad that I've gotten it, but it gets you in the door, and down the road, it's changed the, at least for me, how I interact with linear TV now in that sort of streaming model. But to your point, Google Cloud misses consensus by less than 2%. YouTube ads beats by 2%. YouTube ads is
Guts,
almost
it's
as
all your
big
fault, man. Should never
of a
left.
segment as Google Cloud. Advertising
What's up, Jay?
as a whole is 7 times, almost 8 times bigger than Google Cloud, and it beats by nearly the same margin that Google Cloud misses by. So look, we try to poke a hole in these stocks. We try to find negativity at times, especially when stocks have been performing as well as Alphabet has. There's a lot of good in this report.
There is a lot of good in this report. And to your point about the NFL Sunday Ticket, I mean, the NFL gets around 17 million views per game in terms of average. The NBA, for example, which just began officially yesterday, gets around 2 million. So the NFL is extremely lucrative to their YouTube business, which I still see as a positive, and I still see the overall figures growing on a year-over-year basis. I mean, there is a way to spin this positively, but there's no way to spin a 9% move to the downside positively, although shares are still up over 40% on the year. So now when trading this name, I would say with some of this selling and with actually still the optimism that was expressed by many of the analysts I was reading today, it seems like they do believe that some of this downside is now being exaggerated. What are you thinking for an example trade in this name?
Yeah, so it's hard to spin a 9.1% move to the downside as positively, but we're going to try in the sense that maybe it's an opportunity if you haven't been involved in this name. Maybe you see a company that has done a lot of things well, and now it's at a discount relative to yesterday's price by nearly 10%. Now, doesn't necessarily mean that this stock is going to just snap back to where it was. So I looked at a strategy called a call condor. It will benefit from a move higher, but there's a point at which it can go too far and we get back those potential profits to the upside. And so What I looked at here was going out to the November monthly cycle. Now that's about, let's call it 3 or 4 weeks away from now, just under 1 month from today. And what we're looking at is buying a $5 wide call spread. So that's going to be the 123, 128 in this case. And then selling a $3 wide call spread just a little bit further out of the money. In this case, that's going to be the 130, 133. Now, if you look at this in terms of the risk profile, what you're going to see is there is a section between 128 and 130 where this is sort of its best case scenario. If done for $2, this can expand to $3 in profit. So, of course, we know that means $200 in risk to make $300 in profit. Now, but because we've sold a $3 wide spread in this illustration, the risk then is it can overshoot to the upside. As it breaches 130 and works its way to 133, the risk is, well, you break even. If all these options are in the money, one would anticipate they would offset each other for what would net out to be a zero difference from where it was put on. So that's the risk, is they can overshoot to the upside. Break even is 125 though. You simply just add that $2 to 123. And so the other nice thing about this is while we're buying premium, we're doing a strategy that benefits from an upside move. Alphabet right now trades at 125.95. So there is 95 cents in cushion to the downside before that break even on the downside is hit. So it's in the profitability zone as we speak right now. $200 in risk to the downside if it falls below 123. That's ultimately where the risk is.
Yeah, no wonder we're seeing some of this selling sort of progress here, because we have the NASDAQ, S&P, and Russell right now all pretty much at their session low. So seeing some of that selling persist. But we will leave it there. Now coming up next, we will talk all things Mattel as they have earnings due later today. Also down about 1% on the session. Renita Young will have more on that stock for us coming up next.
Happy for you, Bubba. You're low there. Down 1.5%. It's not been any sort of capitulation, just ugly melting. I don't know, the price action just the last few days have just, I guess today kind of cleaned up, but it really still felt choppy today. Broke out of its range. Just these downside moves have been today's not as bad as yesterday. I just didn't trade it great, I suppose. Had puts like right here, that break. Got stopped out. Got him again. Stopped out. I get him here. So, yeah, I got him there. Yeah. RV the trades. I think dailies I'm just not as acquainted with.
The toys of the year.
Yeah, and I think that's such a good point because this is still the conversation. I mean, Barbie is still
Yay,
being
it's
discussed,
Barbie!
even though the movie has been, I'd say, it's out of theaters at this point, right?
I think you can watch it at home.
Yeah,
but
you
what I
can.
would say is, when you're looking at this, has it been as internationally a success the same way? I know that this company before was like 55-45 in terms of revenue here in North America versus international. And we know Barbie Mania has swept across the U.S., but has it breached the borders? This is an international story. Has it been the whole ship, the whole pie is growing?
It looks like it is reaching international audiences, but by far it's still more successful in North America, with North American revenue coming in the billions and international revenue under that.
Yeah, and see, I have been looking at some of the best opening weekends in terms of sales historically, and even though it's one of the best, I think it's top 3 of this year as far as its opening debut went, it still doesn't come close to some of the great success of like the Marvel films. I mean, some of the Jurassic Park movies, if you look historically, it still didn't necessarily top all of the charts.
Did Taylor Swift win?
No, so she's it's only released on the weekend, so it's incomparable.
But you know what? It was a low bar this summer, to be sure.
It was, because we went back and like the best movies like are from like 2005. I mean, this year just couldn't compare. But we'll have to see if that translates into some positive earnings. Of course, for Mattel, we'll leave it there. Appreciate the insight. Renita Young, senior markets correspondent here for the network. Now coming up next, it's time for Under 30. So we are looking at Snap, which saw some optimism as far as it.
A little flushy low on SPY. Let's see. Find buying pressure, some support, or actually start to see some drop. I don't believe the bears when it's like this. I don't know. It just seems so controlled. Maybe it's just because SPY always wants to go up. When it goes down, it just looks so unnatural. Still have a pretty good amount of time. I mean, today, I don't know. See if we get a rebound back to VWAP, kind of to safety, or if we get just more lows. It is starting to taper down here, though. A little steeper channel to this less steep. The sign that it's rounding a bottom. Unless if it's breaking back out of that right here, which it might be. Yeah, it looks like it is. Still in that steeper channel. I want to play the reversal so bad. I'm gonna be patient.
Absolutely, and I would say this just goes to show the ever-evolving and competitive world that is social media. Things come in and out of favor so quickly. And seeing a 5% move to the downside today on what was objectively a pretty strong report. So here to tell us more on some of these numbers, I'd like to welcome in George Tillis, Senior Markets Correspondent for the network. So George, walk us through what has investors spooked. I know we're seeing some of the selling progress in the overall market here, but a 5% move, I mean,
Six jack, I got the flush. You had nothing.
Well, yeah, I mean, if you look at the price action today, you would say it's the market, but if you look at the price
Calling on
action for
sixes.
Snap over the past 3
Like how you
years,
called my bluff,
I mean,
though.
the stock has been tremendously
I
to
got
the
lucky.
downside. And I think if you look at the report, there's some highlights that were positive, but there are some that are negative as well, and I'll explain in a sec. But overall, if you look at the earnings per share, they did eke
Favored
out
for
an adjusted
gambling.
profit of 2 cents versus an expected loss of 4 cents. But if you compare that to last year for the same quarter, it's about a 75% decline because they earned about 8 cents for that quarter. And sales came in slightly higher than estimates, just barely positive at 1.18 billion versus an expected decline to 1.11 billion. If you look at the total number of daily active users, it's growing, and they're growing it by double
Guy
digits.
calls everything.
about
6 king
4%
offsuit.
406 million. But one of the things I did
Yeah,
notice
you don't
in the
deserve those
report
chips.
is if you look at the average revenue per user, that was actually down by about 3.8% in North America, but that was made up for increases in their international markets, which were positive average revenue per user growth. Now, the other thing is just a little bit concerning is the company's not providing any guidance, and it's a little bit confounding as well because they initiated or
See,
spoke
it's
about
10 minutes to
initiating
2
a
o'clock.
$500 million share buyback, which to me is a little bit confounding because you're not giving guidance, but you're buying back shares. So that's telling me and other investors or potential investors that you don't have enough to do with the money, and why not buy back shares to pacify investors but not provide any guidance. So I think that's concerning. I will say this also, that Snap
Yeah, lucky we
hasn't
folded.
produced consistent profitability, I think, in its public debut or whenever it was, and I think that's still a challenge for the business going forward because you got to look
They
at
elected
the
Speaker of the
negative
House?
earnings yield.
When was that?
They lost about $380 million in the quarter. If you annualize that, that's about 1.5 billion on about 4.4 billion in sales, and so that's still going to weigh on the stock tremendously.
415, 2 more points down.
Not
Whoa.
enough, and not enough. Also,
Maybe.
the fact that they came
By
in
that
with
point,
adjusted
if you're on
profits for the
dailies,
quarter.
George, there's also something that I kind of think about as well, which
Definitely
is some
fighting the
names,
clock.
some companies, some company
We're
executives
doing tomorrow's.
have just earned the trust of the street and investors over time with their successes. Snap has been spinning its wheels for quite some time. The stock rallied up to over $12 initially after these earnings announcements hit the news wire. And it stays there for all of a handful of minutes before completely undoing the rally, and of course is now down 5.5%. At some point, George, some stocks the street just sells into whenever there's an opportunity, and others are just to have buyers waiting in the wind. This doesn't seem to be one of those.
Yeah, I mean, if you look at the earnings results, in the past 5 or 6 quarters, they just continue to
No
press
ace,
this one
no
lower.
heart.
And because, like I said, the financial metrics make sense for them to do so. But
What's glided
there's
mean?
something positive here as well, because do they have the cash to buy back the shares? They do. They've got 3.6 billion in cash and equivalents on the books. So if they're buying back shares, that means they're probably not going to be issuing you shares, and that may stop the dilution, which they've done a great job of doing in the past, couple of years or so. So that might be positive, but look,
Okay, I'm
this is going to
grabbing
be
some
a
calls there.
quarter story for a company like Snap. They
Final
have to start
trade.
monetizing ads, and they're talking about that, but at the same time, AI chatbots and bots and such are expensive.
Still have 2
So
hours
that's
to the
going to
bell,
continue
though.
to weigh
Wow.
on operating income, which is still negative for this business.
I guess it doesn't have to be a
Yeah, I
final
think
trade. I have
that's
backup
really
account.
well put, and I like that you said it's a quarter-over-quarter story, because you can't even zoom out at this chart. This stock was, over $80 at its peak, so it's
Had some
crazy
tapering.
to see it now.
Need to see some right shoulder liquidity over here outside of that channel.
Snap. George Tillis, senior markets correspondent here for the network.
So
That also
definitely
does it for
trying to
Alex
call
and
the head here,
myself.
the
We are
inverse
ending
head.
the session slightly off of lows here, but the Nasdaq still down 2.5%.
We just do this thing again,
Coming
though.
up
Little
next, we have the
flag.
watch list right here on the Schwab Network.
These are dailies too, so bit more sketch. Please turn off. Please don't lag. What did I get? Should have gotten closer to the money. Got 418s. Should have gotten like 417s at least. Contracts aren't moving very much. Hours left on them. Come on. I'll sell the first two at VWAP. In 1027s. Nice. Air Force. It's weird these calls actually haven't moved more. That move. Oh, re-raise. Only. They have two pair? Give me a club. A clubbing. I gotta go for it. Oh my gosh. Must have two pair. Ah, sucks. Couple of all-ins. Straight out there? I guess there could be, huh? Ace king. He had the two. Yeah. Take an ace king. Gambled away those. To that right shoulder. Contracts really haven't. They're too far out of the money? Yeah, it's because they're out of the money, I think. Interesting. Oh, that was a good idea. Dang it, man. Hoping someone had a king there. It's only 2 o'clock. We're back up in this channel, which is bullish. Looking for some red candles to add. So far, no dice. It's just been straight green candles for like 10 minutes. Get a retest on this channel that we just popped back into.
And when we are looking at Meta's results, it's all about the ad revenue, right? Other key metrics to watch: daily active users expected to come in right around 2 billion, 2.07 billion, monthly active users at 3.05 billion, and then average revenue per user at $11.05. Of course, there's also the metaverse, the Reality Labs segment that investors really haven't liked because it's still losing money. That's expected to continue to post a loss. They had an operating loss of $3.9 billion in the third quarter. They did say that they expect that loss to widen, so don't be surprised if we see that. But we'll definitely see what they have to say about expenses as well, because we know that that's really been the key to Meta this year and why we've seen the stock absolutely rally. We'll also be looking for any updates to the December quarter outlook. Previously, the expectations are for revenue of $38.7 billion. That would imply about 20% growth as well on EPS of $4.81. So keep all of those numbers in mind when Meta reports after the bell today. Not a lot of enthusiasm today. Meta shares down about 3.3%. But again, the overall market is lower, as you pointed out. So could just be, falling victim to some of this negative sentiment that we're seeing on the street.
All right, thank you for that, Caroline Woods. Appreciate it. A good look there at Meta. All right, we have two very special guests here live on set at the Schwab Impact Conference to talk about the current market environment, what they're doing together, even a new book worth discussing. So our very special guests here right now, Omar Aguilar, CEO and CIO, Schwab Asset Management, and Sebastian Page, CIO at T. Rowe Price. Thank you both for being here today. The conference is a great success. I see a lot of lively folks having financial decisions, meeting people. Omar, tell me a little bit. Obviously, this is a time where people look to you for advice. They've seen the market volatility. You see the S&P today below 4,200 as bond yields surged to the highest levels since 2007 and then pulled back. What do you tell them about some of the action we've been seeing?
Yes, no, thank you. This is always a great event, and it's great to be here. Great to actually work with Sebastian and the T. Rowe team. You know, we try to put things in perspective for advisors to actually think about what drives performance and what are the investment objectives of their clients. You know, understanding their needs is sort of the first thing that we try to talk to clients about. You know, what is that they're trying to achieve and how do they actually work to that? Then we basically go to the level of what is the macro environment? Where are we in the cycle? And this particular cycle is actually being very different. I know that it's a cliche that people say this time is different, but it does seem to be that the pandemic has made things very, very different for that. So we try to just emphasize to advisors the need to understand where are in the cycle and also what does that mean for their investment strategy for their portfolios. And I think to your point, I think the biggest thing right now is understanding where that volatility of bond yields and the implication of that into the rest of their investments. You know, we have been very clear that until the Fed ends and there's a stability in the bond market,
that level
it's
there.
going to be hard to understand.
That's
the
where we need
rest
to grab
of what
liquidity
happens with the
for
rest of the
holes on that right shoulder.
Yeah, understood. And Sebastian, you have a new book, which is Beyond Diversification. Tell us a little bit about why now. It seems a very appropriate title. What brought you to bring this book out now?
You know, if you look at economic growth right now, it's actually surprising on the upside. But at the same time, we have yet to feel the full effects of 550 basis points of Fed hikes.
Yep.
And we're all waiting in anticipation for those tighter financial conditions, increased cost of borrowing,
this is
to really hit
this is
the
why you want to
economy.
fully wait for that channel
So,
break.
I don't think now's the
You
time
can do
to
the
hit
head,
the
but
panic button and
you just
go
start
all the
scaling
way,
out here if
put
it's
all
not
your
going to break.
portfolio into cash.
I'm out of buying power, so I
Because, you
didn't
know,
scale
over
out.
time, if you do that, you're just not going to
Foolishly,
participate
we'll
in
see though.
markets.
See if it'll break
At
it.
the same time, now's not the time to take a large overweight stocks position and
Still pretty
load
early,
up
though.
on risk. So it's trite advice, but now is kind of a time to be quite balanced, have a cash buffer. In our portfolios, when we look at
Breaking
our
back up
tactical
into this
positions,
channel
we're
is
kind of close to
bullish,
neutral
though.
between stocks and bonds. It's super
This one right
boring
here.
on financial media. But
Getting
it's
back up
actually
in there.
good advice.
Boring works, and you
So
said
if we can
now
stay
is
up here,
not
that
the
would be
time
good.
to be the hero. You know, it's a very difficult environment. I'm hearing that from people who have been in the business a lifetime. It's a very difficult environment at this point. Omar, when you give advice and people want to be diversified, how do you advise them? I mean, because we talk about a lot of folks that are running to cash. I know some
You're rejecting that
financial
also, though.
advisors who have more cash than they normally would have, or maybe haven't had in their careers. Something's different happening, and what's your outlook for 2024?
Yes, no, it is a natural reaction, and I think as we just discussed in here, you know, the level of uncertainty that we're living today, you know, it's probably the highest we have seen in a long time. Normally, when you follow cycles, you tend to see where you're in the end of the cycle, you're going to end in a recession, you're going to start the recovery. This particular cycle has been so different and so difficult to anticipate that it's very natural for people to understand that, oh, I want to be more conservative. I want to just do something else that it is. Now, you know, we don't advise people to basically move all the money to cash because making an active decision, that means they're trying to time the market.
Right.
And we are very convinced that timing the market is a very losing proposition. And we prefer to people to understand that stay invested.
Would have just called there, but got a
is preferable
flush that could land.
the market. So stay invested is actually something that we
have,
think you know, people need to continue to do. Now, what does that mean?
Full house.
Making money in cash
Kings,
is an
who
active
knows?
decision. Staying in cash is an active decision.
Interesting.
So for us, what we advise clients to do is to say, start
Actually
the
fine
diversification,
with that, I think.
increase your duration. You know,
He's holding
buy
like a full
bonds.
house.
Yes, there will be a portion of those that will probably lose money over the course of some period, but in your time horizon, they will find a place
slow
where you
play
need to
got
have
the
them.
ace holder.
The same thing with equities. Now, what is important about this environment
But he was
is
raising
we have
before
more
that.
options
Or no, I guess
than
the
what
ace
we
had
had
come
3
out.
years ago. 3 years
Or no, that
ago,
ace
with
came
the
out
level of
on the
rates
river,
that we
didn't it?
had, we only had equities. Now we have equities. We
He
have
was just-
income coming from
he was
bonds.
bluffing
We
there.
have cash. There's more opportunities for investing.
Yes, we were saying there is no alternative. was our phrase at that time. And I think you make a great point, because so often we say there's maybe 10 great market days. If you're all in cash, you may miss one, right? If you're not at least invested and diversified at that point. You had some thoughts. You were talking about the job market, inflation, excess savings that are running out. Why don't you expand on some of those, Sebastian?
You know, a lot of the popular narratives at the moment are a little bit misleading.
Okay.
So this idea that we're seeing cracks in the job market, you've heard this for months now. And
wasn't even seeing this straight out there.
The new claims for unemployment have been coming down for 6 months, not up. The non-farm payrolls, the new jobs created, have
Guess
been
they could have a
coming
higher
up, not
rate,
down.
maybe. Yeah.
And we have 9.6 million open jobs in the country. So yes, the trend is towards a normalization of the labor market, but it is not cracking and it is not breaking, at least not yet, based on, yes, some lagging data, but overall there's evidence that the labor market is still pretty hot, and that's actually contributing in part to this potentially sticky inflation.
Yeah, without a doubt. And you have consumer spending.
I'm concerned with these calls.
Consumer spending, a big portion.
It might not happen until end of day.
And we'll see. We had revenge travel. People were
Revenge
looking
travel.
for experiences. And as we get into the holidays, you know, we'll see how consumers behave. They will have higher credit card rates, and that's something. But they seem very resilient. That being said, Omar, today you and Sebastian are here together. Why is that?
Well, you know,
we have a few things going on, right?
Well, many things going on. I think, you know, part of our, experience is obviously get to know people, get to see people, talk to advisors, you know, understand what their needs. A big part of being an investor includes getting feedback from all constituents. We get feedback from the markets all the time. We get feedback from our own investment experience on a day-to-day with our investment teams. We're getting feedback from investors of what is their view. A big part of investing ends up being the behavior of investors. You know, what is their perceived notion of what they want to do and how they want to do it. And I think that's the big part of the flows that we see overall. So our objective is to also understand and potentially offer, you know, advice to their own advisors so that they can actually
straight out there too.
Talk to their own clients.
And there's students here today as well. It's nice to speak with them, because my children are in college.
Just no flushes.
But I always tell them a compounded dollar,
That's
right?
straight.
You
Oh well.
start now and it will add up over time. I think
They're
they
raised.
get it. I've been trying to teach them about
You did have a
stock
6.
exchange and everything all the years. I think they got it. They're
slow
getting
play.
it over time. It's wonderful to see you both. Congratulations, a beautiful event here today, and I look forward to seeing you again
thanks.
soon. And Beyond
An insult.
Diversification, Sebastian's book, you can get that too. Omar Aguilar, CIO Schwab Asset Management, and Sebastian Page, CIO at T. Rowe Price. Thank you both for
Players are, I think, are a little better on this this higher stakes.
Rick Worcester standing by, president of
I don't know, maybe
Schwab.
not.
He'll tell us more
Just in my
about
head.
what we're experiencing here at the Impact
Come on,
Conference,
give me heart.
and talk about the quarterly report and outlook for Charles Schwab as well. Don't miss it. We'll be right back.
Jeez, where'd I punt all my chips away to? Down to 1.5. Nice little bounce. And that inverse head and shoulders. Back up into this channel. Less aggressive channel. Earn me more tapering down here. Could take the rest of the day though, unfortunately. That's the only issue. Trading tomorrow's contracts. Or like in the money, maybe. Deeper in the money. Makes sense. Not out of the money dailies like some idiots. Yes. Yes, Jay. There you go. 2.3% down on GME. Jay, stop looking at the charts. You're supposed to be watching me play poker. Here we go. Go on. Go on, Spy. Do it. Do it. Let's fill that upside gap. Here, cool. Up to this resistance again. Let's see what it does. Needs to grab that liquidity for the other shoulder. The bulls to take it. There you go. Go on. Yep. Can you imagine if we filled the topside gap today? Be crazy, crazy big day. There's still time for that. Those kind of cloud market shenanigans. High card. Oh. Wee. All right. 2:15. Plenty of time for SPY to go green.
Yeah, without a doubt. And when you have the outlook going forward, you have the position of strength. You have so many folks that we're going to
Cole
talk
really
about that
does it up when she's at conventions.
Integration too, that have come on board. You know, what do you tell them about the outlook?
Well, I'd say one thing, when we talk about the TD clients that have come over, the outlook for us is about how we bring the best of both firms to both sets of clients. We have never been in a stronger position than we've been in than we are today, because we've spent the last 3 years bringing the best of what Ameritrade had to offer, including things like the Schwab network.
Thank you,
that now are both Schwab and Ameritrade clients can enjoy. And of course, all the technology that Ameritrade had, whether it was the Thinkorswim platform or the ThinkPipes and iRebal, all the things we brought for advisors.
Yeah.
We've really invested the last 3 years
All right,
in bringing
next.
the best of both firms together for the
Let's see,
benefit of our
let's zoom out
collective
here a little bit.
It certainly has been the talk of Wall Street, a huge undertaking to have
Good
this.
first,
But
I guess.
when you think about it,
Breaking
any
419
idea,
at horizontal
anything more
resistance.
About the timeline, anything more pertaining to this that we may have left out?
There's another channel up here, of course, the main intraday channel. Got a ways before that, though. It's above VWAP.
You only get one chance to make a good first impression. So we've spent the last 3 years preparing to bring clients over to Ameritrade. One thing I'd say is that when we bought Ameritrade had $1.3 trillion of assets. At the end of 2022, that was $1.8 trillion. So the firm has grown significantly, and we've invested in that growth.
Yeah.
To wrap up on the timeline, the final thing I would say is we've done 3 big conversions so far where we've moved 80% of the clients from being Ameritrade clients to being Schwab clients. We have 20% more to go. We'll finish it towards the end of this year and in the first half of next year.
Right, and the challenge was to do this seamlessly, and it's been going so smoothly. It's something that people have been talking about. You mentioned that you're positioned to serve clients, advisors, investors. What have you been hearing from the clients, let's say, for example?
Well, I would say when we think about the clients, the vast majority have been delighted to come to Schwab. And the reason they're delighted to come to Schwab is because we put the time and energy in to making sure that what we deliver to them is what they had at Ameritrade, plus all the things we have at Schwab. So they really are getting the best of both worlds. Now, there are some advisors that, as they make that transition, or retail clients, as they make the transition, they need help navigating a new platform, a new way of doing business, a new way of trading, all those different things. And we're here to support that, and we have the people to go out and help them. And then there's a group of advisors or clients
Come on, man.
that have really custom needs.
Need to bet
We're
50.
doing things a little bit differently at Ameritrade, and we're really trying to lean into that group and make sure we deliver what they need as well.
Yeah. I wanted to talk a little about the RIA seeing information, the newer entrants that we talked about, some of the headlines. What should they know about Schwab? I want to make sure that everybody, we get the message out, because that's what you've been working on, and the custody business too.
Yeah, sure. Well, I'd say the message I would give to advisors that are new to Schwab is that, well, first, we were founded 50 years ago, and we've been in the RIA business, serving RIAs for 35 years. This is our 33rd impact. It's the biggest one we've ever had, but it's our 33rd one. And our business is to support advisors and to make them successful, and to make them successful with their clients. Our success, their success is our success, and so we'll do anything to help advisors, and we're the biggest in the space. We have the scale, we have the efficiency, we have the safety and security so that RIAs can do what they need to do and rest at night knowing we stand behind them to make them successful.
Yeah, and coming from that position of growth and strength, and as you mentioned, 50 years from 1971 and beyond, right? We're still going. As you talk to folks in the RIA industry, you're seeing more and more coming on, right, at this point. As you looked ahead to 2024, anything that you'd like to, I don't mean to be repetitive, but anything more that you'd like to add? Because as somebody who's been in the business a lifetime here, there's ups and downs, and I think stay the course, but having an RIA is a big deal.
It is,
right?
And the business is one that's evolving. And one of the things that I like to say about the RIA business is that there is a bull market for advice. More and more end investors want someone to wrap their arms around them, help them, guide them to where they need to be in their financial life.
See if we can
and
find
there's
some
no one better
support.
positioned than the RIA community, because
Shoulder.
they have the independence, they're fiduciaries, they put the client's needs at the forefront. And with the demand for advice and that positioning, this
Just got a
industry
9
is
if
going
it
to
calls.
continue to grow,
Dang
and I'm
it.
confident that when we're back here
210?
next year,
I just really don't think I have anything.
for our 34th go round.
Yeah, I look forward
I
to
mean,
that.
we're not even.
So many tools.
We have no
and
perspectives with
education.
210 offsuit.
The investor community, the retail investor just continues to grow. And it's nice to be a part of the Schwab team. Thank you so much for being with us.
Thanks for having me on. It's great to spend this time with you.
Thank you for being with us today. President of Charles Schwab, Rick Worcester, thank you so much here live at the Charles Schwab Impact Conference. Coming up next, we're going to continue to take a look here at Bitcoin. Why is it surging, right? We talked about the potential of a spot Bitcoin ETF doubling, right? This is the big move for crypto. Next.
Schwab Bank Investor Checking.
Little flash crash. Or Java crash, whatever we use, I don't know. Kinda wanna get out of these calls. Wait for more confirmation. It's looking good though. Just don't like to be in dailies this late. Ooh. It's folded. Aggressive. King 2. Oh, okay, hit a 2. Okay. Okay. Might get another opportunity for puts here. That is not out of the question at all. Wanted to call it, but my hands beat mine. No one called. Let's see if we get a queen out there. Put some more chips out. Not holding up. See if you can find support at the bottom of this channel. $230, 4.5. VWAP is within reach. Players are playing so tight. He's got that 5. I'm in a bad position here. Oh my gosh, of course I have to get 2 pair. One to easy fold. Checked. Be a hard fold for him. Oh no. Oh, I had the higher 2 pair. Oh my gosh, that was close. Spy. Breaking this channel. See if it holds this one. You have to call. Nice, Bubba. Well done, man. What about an all-in? How's that compared to a call? You were probably talking about the turn. I just got myself in a bad position there. Just couldn't get a read because I wasn't the aggressor, and then I was, and then I got lucky that he checked on the river. He very well could have been slow playing that check, but that's hard to do. Yeah, he's just trying to get his chips back. Mm-hmm. Tilty. Oh, tilty. Oh shoot. What the heck? It's one click tip. Just seeing what it would do. Oh. I can hold this channel here. Oh shoot, clubs are out there too though. Careful. Higher 2 pair? Wow. bet a little smaller on that turn. Testing that channel there. That. An hour and a half left. Don't get shaken out of these calls, but this is the spot. Tapered though. Don't know if enough time for these things to hold their value. Nvidia dumped. Little min bet. He folded. I was actually trying to go all in on that river just to see if someone wanted to gamble. But I just min bet instead. These guys would have folded though, they're playing so tight. Actually, I don't know, like I had ace queen. Top pair, top kicker. Maybe he would have called. Dang, another straight. I have a higher straight. Disconnected the jack also. Just gonna call. Yeah, 10 jack. Wait, he didn't have it till the river? Or no, he had it before the river. Got it on the turn. Got a higher straight. You checked. Oh, wasn't expecting pocket kings. I should not check on the river. Good thing though. I would have gone all in there. I should have gotten in the money. Or tomorrow's contracts. Alright, get back green. I'm gonna sell these. Not gonna hold for VWAP. I think we might flush here low of the day though. Breaking, we're holding below that channel. The losses here. 15 minutes to power hour. Don't have to go to VWAP.
Stock markets, you know, there's a lot of expensive stocks out there, and those are some of the stocks that are getting hurt the most today. So maybe it's not quite time to buy those yet. Right. However, some of the lower value price stocks are actually very attractive. 10 times earnings, 11 times earnings. We have portfolios that take advantage of those positions, and we would advise clients to look at those.
Yeah, Alphabet's a name that you do like, though, for the Alphabet Google.
We do like Alphabet over the medium term. However, what's interesting today, it's down 9.5%, which is certainly not great. Alphabet's not making a lot of money on AI yet. They're spending money on AI. Right. They're not making much money on AI. So who's making money? NVIDIA, Microsoft is making some money on
folding.
AI. In the medium
Small
term,
blinds
we
folding.
think that Alphabet is one of the winners in the AI space. We think their cloud business is going to continue to grow over time, and it's trading at 19 times earnings, which is a reasonable valuation for a really good business.
Yeah, it certainly seems reasonable. Sometimes we see the tech-related stocks soaring. Tell me a little bit about Total. When we look at the world of energy, this is a name that you think could be durable play.
So we think Total Energy is another really attractive long-term story. It's a stock with a 5.5% dividend yield. So think about cash paying 5%. Here you get a 5% dividend yield, and that dividend is going to grow over time. Total is really leading the energy revolution. They're investing in new energy, renewables. So we like that aspect. Right. And the valuation is really attractive. Lastly, it's a geopolitical hedge. So at a time when political tensions are flaring up in many places around the world, Total, we think, will benefit from higher oil prices and be a hedge in your portfolio.
And then tell me about a name like Yum China. Good news there?
Yum China's, we think, a risk-averse way to play investing in China. So the Chinese economy continues to slow. Structural growth is going to be lower in the future than it was in the past. But what's interesting about Yum China, they control their own destiny to a significant extent. They can build new stores, they can have same-store sales growth, and they can drive some slight margin expansion. Which
higher than a 6?
leads you to,
most likely.
You know, we think a low single-digit same-store sales growth plus the footage growth can get you to actually a low to mid-teens earnings growth over time in a fairly low-risk compounding way. Fast food is a pretty durable concept. We think it'll work in China too.
All right, that's good to know. And last but not least, BNP Paribas.
BNP Paribas, a value stock, a stock that's a bit contrarian.
15 minutes.
Banks are out of favor in the U.S. and
Power
they're
hour.
even more out of favor in Europe. What's interesting is that BNP Paribas has been able to grow book value at a very consistent rate over the last 10 to 12 years.
Paribas.
And you get a really high dividend and a stock trading at 0.6 times book. So we think that you get on a base case a 12% return in the stock, compounding,
just chopping around, building liquidity.
That would add another 15 or 20% in a given year. So an attractive long-term return and what we think is a pretty low risk and out of favor sector.
All right, thank you for all of those. It's great to see you, Ben Kirby of Thornburg Investment Management. Glad you were on the show and breaking down some of the market action and some ideas for a medium or longer term. Thank you.
Wonderful, thank you.
Still ahead, our panel is ready to take a look at Alphabet Google a little more closely. What you need to know about the latest quarter and what it could mean for some of the other big tech names. Coming up.
Coming down a little bit. That low a day. It broke there, but it's just been so mellow and choppy. Not believed it. Maybe it's happened now. Aggressive. Aggressive of a raise. Jeez, Beyond's down 7%. That's freaking quick. Runs down 7 also. Quarter. See 1 1/4. Down 2. Timed out, people. Need to find where they are again. Let's see here. Discord isn't very quick. Got a straight? Oh. The navigation on Discord's kind of clunky. But their avatars look so friendly. Yeah, there's only 2 in there, right? There's more?
In AI since 2010,
I only saw 2 in the timed out.
Development for the company. They've been investing heavily in AI for many years. So just over
timed out roll.
During the summer, they announced AI being built into really all their consumer-facing products like the Pixel phone, the watch, into Fitbit, and even an extension for Bard going into their Office suite. So if you use Sheets, Docs, or even Gmail, you're getting AI built in. So we do
98
feel like
members?
They are very well positioned. They're well capitalized. They have money
88
to
members?
invest in the space.
Wait, hold on.
And it's just a question of how they will monetize that and what is going to be the killer app. What can go from zero revenue to maybe $1 billion product. It remains to be seen, but we do feel like Google is well positioned to invest in that space and bring a product to market and deliver on the bottom line.
Andrew, I know that you like this one.
Why is the welcome screen empty?
Been following it and invested in it, and we think about the Magnificent
I don't know
Seven.
about.
What other names do you like in the group?
Oh yeah, Jay, you have a thumbs up to verify. Does that work?
The secret is, I think if you're a portfolio manager, you have to own them all. My concern is that there's a good deal of crowding that's going on in the Magnificent Seven, in the NYSE FANG Plus Index. It's the only index that hasn't really broken down from a broad distribution pattern.
All members match these search results.
First to do so.
Not searching anything.
Weight S&P 500, Euro Stocks 50. These all look like they're headed a lot lower. And the NYSE FANG, which includes Google, Amazon, and the rest, has been hanging in there. And I guess my real concern is if it breaks, and technical support is around 71, 75. I think that would be devastating for broader equity sentiment. Something to, I guess, keep an eye on.
Maybe double bottom there.
Favorites of the bunch.
Got 5 minutes per hour.
I would put Amazon at the top of the list right now. I think they've got the retail business that's working, sort of hitting on all cylinders. And I'm hoping that AWS, when they report tomorrow, is going to be, up
this is
1
weird.
Percentage point to
Not showing me any
like
members now.
Year-over-year growth. I think that would be a good upside surprise. But again, cautionary kind of story here on
members.
The group.
Not searching anything.
Just a lot of crowding in the group. That always happens at the end of a
Doesn't
cycle, and I'm a little
show
concerned
anything.
that it breaks and it leads to some greater downside, greater momentum in the overall market.
Yeah. And Chris Wong, we're out of time, but I did like that you also brought the regulatory risk to the forefront, looking at the DOJ
rip.
And,
Rip.
some of the things they're focusing on.
Okay, I'll sell a VWAP. Just kidding. I'm going to start selling it. Profitability. Maybe just sell all of it. It's green. That just so happens to favor me.
Great look at the Magnificent Seven and
Which I'll be so fortunate today, though.
Thanks for being with me, friends. I'm Nicole Petalides, live from the the Charles Schwab Impact Conference in Philadelphia. I will see you tomorrow. Keep it right here. Oliver Rennick, Market on Close, next.
There's more. There were two. Is there more than two? You remove the thumbs up to like or verify or whatever. It's still showing it. That doesn't work. Need to update it? Why? Beautiful. I hate updating. Oh, you're gonna dance around here now, Spy? Well, how am I gonna know who to... If you haven't tagged them, that's the only way I can do it, right? I didn't even see how it's straight. Whoops. Whoops. Guess we'll never know. Three minutes to power hour. Members. Yeah, no. The two that were timed out, I banned. Did I do good? That's a good job, thank you. Oh, you're talking about people you haven't timed out? You want me to start banning? I mean, I can. I don't like to do it unless there's a good reason, I guess. I break the rules. Not just because they have my name. Or have something close to my name. Bought some calls overnight for force anyone to buy puts? Wait. Why are you buying calls then? Just because we haven't rallied up? Still buy puts even though we're low. Do it. What in the world? Kidding me? You get a pair of twos in the turn. Got so lucky. Eyes consolidating at the lows into power hour. Not a great sign. Okay, Power Hour. Do we have time today to get to safety at least? Tapered. Rounded your bottom. Done it all. Kind of built a head and shoulders here though too. But you have inverse head and shoulders, you've got it all. Down 1.4%. WeWork's up 22. Things ripping into close. That's when we traded the other day, huh?
Disappointing, to say the least. Also, Texas Instruments chip makers down too, so it's not just concentrated and isolated to earnings-specific names. It's broadening out throughout the market. Anything growth basically is getting hit today. Utilities and staples are the only sectors higher. Comm services down 6%, so investors are not waiting around for Meta earnings. Meta's down 3.8%. However, there's another big earnings drop that you might have missed. Texas Instruments just getting totally slaughtered. I mean, this is ridiculous. Texas Instruments is not a company that really should be this extremely volatile. Maybe they're falling behind in the market for chip growth. Maybe it's a sign that the economy is not as powerful as we think. I don't know. Seems like maybe they just lost their competitive edge.
He's not wrong.
Stuck in the analog world.
That's a pretty ugly chart.
Shares held up at
support.
165 for almost a year.
That'd be nice for some cash secured puts actually.
You could try to dismiss TXN as an old school semi name that perhaps just isn't up with the times, but I still have trouble finding anything good in a chart of a classic big chip maker just getting destroyed. So that's also not helping the market today at all. Then, in the middle of it,
I'm gonna need VWAP just to get break even.
It wasn't this bad earlier this morning.
Keep just melting around here all day.
Actually, 10-year was just
rest of the day.
Vacillating, still around that 4.85, 4.9 after our 5% rejection, and then in the middle of the stock sell-off, bonds started tanking too. So the Treasury future now is down 0.2%. Here's the good news. The 10s to the 2s are re-steepening a little bit after taking a break from the bear steepening since we touched 5. So the trend generally holding, one that reflects our better than economic expectations. And don't forget tomorrow, GDP as well. Going to be a big print. The steepening here should be encouraging, but it seems like for stocks, they don't really care.
Market's just pricing bad data in the morning, maybe.
What's going on underneath the surface? That's what's fun for bonds. We can look and see the exact same thing, yields going up, but underneath the surface, a totally different beast. Yield curve steepening, the opposite of last year. But the problem with stocks right now is that it doesn't seem to matter. Yield up is just yield up, and equities aren't taking the clues that maybe it's for a good reason. We'll find out tomorrow with GDP, but the economic expectations here continue to get beat. New home sales this morning also were surprisingly good. Now, on the edges of everything, check out down there Bitcoin, hanging out 3%. The chart is undoubtedly a beauty right now. Take it from a cynic like myself. You should be paying attention to this. I've said throughout my entire career of Bitcoin cynicism that the holy
flushing a
grail
bit
for
there.
BTC would be breaking out to the upside while stocks break down to the downside. And that's what you're getting. You're getting the first real correlation break in favor of Bitcoin. Is it just an ETF one-off hype event? We'll find out, but it's not even phased by the equity selling today. A 5% gap between Bitcoin's move and stocks down. Let's bring in Kevin Hanks and Renita Young. joining me here for some of the fundamental data and a look again at the earnings that are causing problems for us. Renita, let's talk Alphabet first, just because if folks missed it this morning, it was the early problem. Our problems have kind of piled on since then, but remind us why the market didn't like this report.
First off, this stock is down almost 10% on the day, and Google is having its worst day in about a year. This comes as, even though earnings and revenue came in better than expected.
What's down 10?
It was the Google Cloud revenue that traders are trading on right
Wow.
now. And in
That's from earnings.
I think that people are trading on the fact that it's such a stark difference between Google's cloud revenue and Microsoft's cloud revenue, which came in accelerating versus Google's that showed that it was decelerating from last quarter and even from last year as well when we look at it. But revenue grew about 11% for Alphabet in the quarter. YouTube ad revenue came in above expectations. Google Cloud revenue, however, missed expectations by more than $20 million, came in at $8.41 billion versus that estimate. Now, the reason why some analysts feel like this is no area to be completely concerned about is because they say Google's cloud revenue only accounts for just 11% of Alphabet's total revenue. Now, while the growing AI demand could boost revenue in the coming quarters, they're shifting their attention and their rhetoric and their notes to that. But before I get into that, I want you to know that analysts today, just in the intraday, have been a little mixed when it comes to the price targets, with a few of them cutting their price targets on Alphabet and a few actually raising their price targets. But mostly,
bad fold.
I still see bullish ratings. We see Piper Sandler still maintaining an overweight
They win the
rating
money.
on this
The money
stock.
is mine.
Needham and Rosenblatt
They
keeping
win the
buy
money.
ratings. Needham or Barclays and Morgan Stanley also keeping buy ratings or overweight ratings rather, while they were two of the analysts who cut ratings. But they expect AI to have a greater impact for Alphabet, Google into 2024. That's the sentiment I'm hearing, along with many of the other analysts.
That's tilting.
Okay, so there's some shaving of expectations happening here. Still going to be a lot of bull ratings assigned to these companies, though. It seems like it's going to take more than a report or two to really break some of the optimism. Still, Kevin, to see a recent winner crash like this, you know, I get the Tesla made an 8% move too, but look, that's Tesla.
Yeah, that's true. There was a flush out there.
Everybody's used to that.
It never came anyways.
Was still off the highs. Alphabet at 52-week highs, trying to get back to the record, following Apple and Nvidia's footsteps, falling short
to collect
here.
blinds.
Do you think that is what kind of spun us out of control, Kevin, or was it bonds that started selling off in the middle of the day? How come we're down 2.5% in Qs?
Yeah.
Yeah, I think that.
Okay.
I think the market's really getting a mixed message from Alphabet, and here's why. If you were expecting Alphabet to make some great strides against Microsoft, who's been in AI since 2019, you might be getting this wrong. Google is just at the early stages of them getting into AI, where Microsoft is way ahead. The real question is, what happens when Amazon Cloud comes out? What happens to that price?
Quick, get a hand before you get the chips.
It looks like Microsoft has taken some market share away from Google Alphabet. What about Amazon? What do they do? Are they taking market share from them as well? Because clearly, Microsoft's been in AI since 2019. Who are they stealing it from? It just so happens Google Alphabet's earnings came out the same day, so that was a pretty easy comparison. But boy, it's hard to look at Google Alphabet's numbers and be disappointed. If you look at the earnings per share, if you look at the revenue, if you look at the growth, they're still growing. I think if the market's selling off because of Google Alphabet, I think that's a miss on the messaging here. Now, you can make a case that
and get ad blocker.
Magnificent Seven, you know, Tom White and I in Fast Market today, Oliver, we talked about bars, high bars and low bars for earnings expectations. Stocks like Boeing had a very low bar. Stock like UPS after the bell is going to have a very low bar. Google Alphabet, Meta, a lot of these other names, they have very high bars for their earnings because the stocks have run so far. And I think what you're seeing in the Magnificent Seven, which If I look at my screen today, it looks like a magnificent 1, Oliver. The rest are all under pressure as those valuations that have run so far are starting to be a little questionable here. The NASDAQ down 2.5%. It is hard for these indices to be up when that key index is down 2.5%, Oliver.
Absolutely. It's just simple market cap math, basically. Hey, Kev, just real fast to the home builders. Are you surprised to see them down 1.5% after pretty
institutions
good
playing?
new home sales? Or does the market already know the
we're below the 200.
Situation is more worried
That's
about rates
ugly.
for this group?
Yeah, I think it's rates.
MACD flipped
and the
over.
overall market is weighing on this group. You're right, though. That new home sales
Probably get a little
number
bounce,
was
but
nothing
the
short
trend
of
might be
spectacular. 759,000
encased at this point to downside.
685 on the consensus. So, yeah, that's a nice beat. And, you know, it's easy to figure out, right? People are still buying new homes because those might be first-time buyers.
Yeah, today's kind of solidifying it.
No one's buying existing homes because no one is
Top
selling
of that
the
channel might
existing homes.
be out of
So,
reach.
with interest rates where they were, where they are now,
I don't
no
want to be shorting it here, though.
2.5 or 3% mortgage to get
Just
a 7.5
not a nice
or
entry.
8. That being said, new home buyers, there's still demand, and the builders
They
are
won't let you
probably
ad block?
taking the hit because they're lowering their interest rates.
Oh,
are
you're talking about on phone?
People, they're trying to make deals to get some buyers off the sidelines.
They only made like
Good numbers
8
from
billion
new home,
in
not so
YouTube
great
ad
for
revenue.
Existing home, Oliver.
What did we hear it was? I can't remember.
All right, well said. Appreciate it, Kevin Renata. Thank you very much, taking us through some of the movers behind the action today. Let's get to those charts and see how much damage is being done with that. Katie Stockton is here next to me in Philadelphia.
Do you watch on mobile?
Fairly Strategy, portfolio manager for TAC. Katie, always good to have you here.
Of course, good to be here.
And a good day.
Not enough.
I mean, I guess it depends which side, but there's a good bit of damage happening here, it seems like. NASDAQ cracked 14.7, S&P's cracked 42. Are these meaningful breaks?
Well, I think you say crack, and that's important because they're not necessarily breaks yet.
They're not. Oh, mine's been fine.
And then it spends a little time there. Well, then we might have a breakdown. But
I don't watch a whole lot on my computer anymore.
Normal for the major indices to come
Pretty much
down
just my
to
phone.
level, test it, snap right back because that's the nature.
And I
of
have a
support.
block over my phone.
Buyers should start stepping
Glorious.
in. But support is never a precise level. So 4,200, we actually have it sort of widened out to about 4,180. That's based on a Fibonacci retracement level. It's a very key level towards, in what we feel is the cyclical uptrend, the preservation of it. So below that, we would feel that risk is heightened. And therein we have is effectively like a top-down stop loss.
Okay, and that kind of is around that 200 DMA for the S&P, a little bit below it?
A little bit below it,
Okay.
but the 200 DMA, I mean, it certainly is another area where people may say, well, I feel comfortable with the pullback to that level, might step in, so it could be another cushion for price.
The NASDAQ has been uniquely supported relative to the S&Ps, right? I mean, 14.7's basically been a line that we don't go under multiple times.
Right.
There are some relationships and charts, kind of NVIDIA's earnings kind of brought us there a little bit, so there's a whole other macro kind of fundamental, but just technically, how important is it for the NASDAQ to hold that 14.7?
I would say less so, because we know that it's really,
RSI
really
divergence
driven by
still
this mega cap tech stocks.
Did they wipe it out?
The support is still intact, technically. If it were to break and we didn't have a break in the S&P
still there.
500, I wouldn't be terribly bothered by that. So
It's still
let's
there,
say
actually.
Apple disappointed.
Made a new low,
We
but it's
got a
not
dip below,
low
but
enough.
then buyers stepped in. So you see how it could sort of evolve in that it might actually present an opportunity. So I wouldn't say it's quite as important because it is so mega cap heavy and also tech heavy. So we will, like everybody else, be scrutinizing the reaction to earnings. And of course, today that was an issue for the market, right?
45
Google or
minutes.
Alphabet's drop impacted the major indices in a pretty strong
Guess
way.
we'd have earnings after the bell. I might be holding these after hours.
That we saw in the heavyweight of Microsoft. I think that was really meaningful.
Yeah.
It did clear a short-term resistance level and is not that far from all-time highs. So it would be hard to imagine a tape in which Microsoft is reaching new highs that wasn't quite strong for that tech sector.
Now, the kind of case-by-case, stock-by-stock situation you're discussing that is right now kind of bouncing off each other. It's not the worst. It's not the best.
Right.
Is there a bias on which particular company matters the most at this juncture? I mean, because of all of them, I guess NVIDIA is the one that's still arguably very clearly trending higher. I mean, higher highs up until like a month ago.
Right.
And nothing even close to lower lows.
I would argue that NVIDIA, when you take a step back and look at the monthly bar chart, it looks pretty toppy, actually.
Really?
It does. It looks a bit like a head and shoulders, but you don't have risk to that until you actually see a breakdown. So NVIDIA looks like it, listen, it's gone from a steep uptrend to now a consolidation phase. It's not to say you can't benefit from short-term moves there. So I don't think that will be key, because I think it has seen such strong upside that now the baton needs to be passed down.
Yeah.
Smaller mid-cap names, they need to really pull the market out of this mess, because the breadth has been so bad. So do we need Apple's participation? Definitely. I mean, it's the #1 stock in the S&P 500. Microsoft is the second runner-up. So those two stocks are definitely key to the market. And of course, if NVIDIA participates as well, that's better. But I don't think it's a requirement. I really would like to see small and mid-cap tech kick in here with some relative performance.
To your point about that passing of the baton and the lack of there being anybody back there to grab it right now, small caps look like miserable. I mean, it's a different, I mean, it is a different stock market, I guess, but like such a big disconnection. Do we now look at the Russell and think maybe that it was sniffing something out? I mean, what do you look at when you look at that?
So we were compelled enough by the Russell 2000 to highlight IWM, the ETF representing that index, in our report today. And we highlighted it because within its longer-term trading range, you can see it's been range-bound for some time. Within that range, we have an oversold indication from 2 of our metrics, and that comes right near support. So this is a critical juncture in that IWM, small caps, should react to their oversold condition, but they really need to do so somewhat immediately to avoid breakdowns.
No, it could come down a little more. Got 159.
And for the S&P 500 too.
As we cut to new 52-week lows, is that's not breakage territory just yet?
It would be if it hangs there. Yeah.
Wow. Yeah. What is your thought on what?
Below here, look at these supports.
Do small caps lead, or is that kind of an antiquated way of thinking about things?
I would think it's more growth leads in a strong tape. So it's more growth versus value.
Small caps, come and save the SPY.
There are influences in sort of on both fronts. It's not a very simple answer necessarily either, because you can have a strong
Sava's up 23%. We work 15 still.
Get into leadership, right? Where's that
SPY just consolidated at the lows, down 1.5 almost.
Sustaining the major indices in their uptrend, but it's a much more difficult market for people to take advantage of, and that's of course been the case for much of this year. The breadth has been really terrible. It is very oversold to the point where we now have contrarian indications, and not just in breadth, but also in sentiment. So sentiment, as you'd imagine, is pretty fearful right now by some metrics. And as much as that's hard for all of us, we also feel like that's when opportunities present themselves.
Okay, it might be intensifying here today if we don't get some bounces back pretty quick. So the Russell's on the verge of a breakdown. The NASDAQ and the broad market still need to see kind of another leg lower for you to describe it as a major break. So we're kind of still testing these support levels, it seems you argue.
I think testing is the key word. So they've all come down to key support, which is, by the way, where we should be thinking about adding exposure barring that breakdown.
Okay, let's talk a few macro charts real fast. I know it's like one of the more boring ones, as we were talking about off stage, but the dollar right now, in the last couple of years, has been such a good tell. So even though it's kind of stuck, it feels like to me, if you can figure out which way it breaks or how to know if it is breaking up or down, your stock questions to some degree are answered. Do you have any strong bias about which way you think the dollar will go?
I think it's neutral. It's in the confines of support and resistance, and within that, it has neutral momentum, sideways kind of price action for the dollar. Resistance is strong, but so is support. So we are going to assume that it's range bound until it proves us otherwise. We do think yields will consolidate, at least in the short term, meaning maybe 6 to 8 weeks or so. And with that, we would also expect the dollar to continue to consolidate. So that's sort of our bias right now. And that would be something I think the equity market would welcome.
Yes.
But listen, if the levels are cleared, we will respect that.
And you still view the dollar and rates as being fairly positively correlated, connected?
For now,
yes. Because they broke apart a little bit here the last couple of weeks. Yields are blown out and dollar didn't do anything.
It just kind of stayed flat, right?
Yeah. Any thoughts on why that is?
I don't know why. The charts won't answer that. I think but it tells us, it's an important lesson because correlations matter over the very long term, but it's really risky to depend on them over the short term and invest that way.
Okay, great stuff, Katie. Thanks for the catch up.
Of course.
Nice.
Fantastic look at the charts and tech with Katie Stockton at Fairlead Strategies, portfolio manager at TAC. All right, that's the technical setup.
40 minutes to close.
Let's dive into the world of advisors.
Full house, cool.
Advisors co-founder joining us next here, talking about some of the major economic themes ahead of tomorrow's data. Nothing better to report as far as stocks go right now. Bonds, not any better there either. The TLT is down almost exactly the same as the Qs, so perhaps there's some poetry there.
The charts won't answer that. Everyone else had 2 pair also. Boo, boo. Wrong black cards. Let's see. 30 minutes to close. Let's see if we can get a little safety here on the SPY. Wasn't meaning to call a reversal today. Had puts all day, just kept getting stopped on them. Wonder if tomorrow if I should just trade 1 day expiry. I think I just do better with that for now. Less easy for me to get stopped out with my strategy of taking profits and then putting a break-even stop. Interesting. Yeah, I think tomorrow I'll try and trade 1 days. Maybe not in the morning. I don't know. I should have a cutoff. Maybe 12 o'clock. I mean, I'd still be down on these, I think, but that just would keep me from getting stopped out so much. Unless I gave myself wider stops. I'd have to get better at my entries. Look at all the happy spot trend lines. Basket weaving. The main ones to look for right now. But yes, basket weaving indeed. So I'll delete this one. This is consolidating for the bears, bear flag, which I'm about to draw another one. We're now in this larger channel up here, but more or less this is just large consolidating at the bottom. Shoot, I meant to call that. We're in this channel, this being the bottom, that being the top, so probably taking some profits at the top of this. Really not bullish until I suppose we break this one. Don't mind these back here, that was earlier in the day. Still have this large one up here. This was our downtrend. This was the tapering. The rounding bottom. It was here, and then it became here. So it is flipping around to make this cup, if the bulls will allow it. But we're not going to have time to do all that today. So I'm just looking for a move to VWAP. Let's see, I can get rid of one of these other ones too. We'll taper one right here. Drop that one. There. $32 minutes. Yeah, I might be holding these after the bell.
Right? Because you're just taking out the tax math there to get to that yield.
Right, very little. And
maybe we get some good earnings.
Tend to be one of the highest quality, sectors in the bond market. And
what do we have after the bell? Let me look.
Of,
a couple of big ones, I think. A couple of the big boys.
And that's just the tax. If you went out on the higher credit risk spectrum of munis, which most people still don't really view as high risk. I don't know, back when I was covering it was
this
like
is let's see.
I don't know where the
IBM, Meta.
now, I would imagine you could get even more
Meta's the only big one, I guess. Service now. IBM is pretty big, but
investors, investment grade is still a good place to be in. That you don't need to stretch down. You ought to really think differently about what risk bucket those credits are in. But when you can get those kinds of yields, raw yields in the 4.5+ range, and then, as I mentioned, on the tax adjusted up, over 8.
Really?
It's really getting compelling. So that's, I think, at the end of the day, the big message is bonds are back, baby. Keep the seatbelts on.
Bonds are back, baby.
Because the volatility is likely to stay high.
I don't like that card very much.
Between a resolute Fed and a resilient economy.
I like that from your notes real fast. The last point on that is that
maybe I should be a little more.
does mean business about getting down to 2%. The market's out of its mind trying to price cuts.
Well, he's
you have top pair.
Resolved that he's going to try to keep interest rates higher, longer, to try to really eradicate these higher levels of inflationary expectations.
I think I'm gonna go out to eat tonight if I go green on the account. I was planning on it, but today's kind of sucked.
GDP print tomorrow? Good job landing the plane, the ship?
Not yet.
Too early to tell.
Sure, 7-8 suited.
Thanks a lot.
Thank you.
Absolutely. Mary Ellen Stanek, co-founder at Baird.
Gotta take advantage of those kids eat free.
Going into the muni bond market to get some yield tax-free, by the way. That's where you get that extra couple percent.
You're just bluffing.
Coming up, we still got some more
pocket
tech
what?
to talk and some options to trade.
What do you got?
Zillow on the list, Applied
10?
Materials.
Is there 10 out there? Ah, dang it. Good trash.
Which has lost a little bit of its upside momentum.
Trash cards.
We'll be right back to do some trading.
Okay, SPY still button up against this resistance. Go all in. Do it. Do it. Do it. Kids eat free? Yeah, kind of. It's like a free kids meal with an adult meal. So, as we invite all our friends to come eat dinner with us. But the kids meals are dope. Like, huge portions. They're no different than the adult ones. Nice. You had 5.8. I love it. Is it? Is it getting... Oh, this guy. Go on. Do it. Is my 200 moving average off on Webull? Because it looks like we're a long ways from the 200. My Webull shows 200 moving average or 2039, and I have a feeling it might be wrong. I don't get how Webull can just be like off on stuff like that. Kind of makes me want to just drop it. Also, how they just like add candle bodies when there wasn't one, or wicks. Instead of a gap, they just put a wick. Pocket of aces, baby. Where's my all-in guy? This theta burn's bad. I was green right here before. Still down. Look at all these calls. It's glorious. Top of this channel. Come on. Break it. Break it. Do it. Nice. I think the options have been kind of messed up today. They're not like updating the prices. Good fold. I was hoping to be green by the time we hit this. Let's see, 30 minutes to go. Got earnings. Could go either way. It's Meta. Oh, looking at 1 minute. Oh, this 200? Yeah. I wish there was a way to, yeah. I think Webull's moving averages might be off at times, though. These guys are all tilting, especially this guy. Did I sell half here, realize some losses? Have a smaller red day or go for green? It'd still be green if I sell some. But now I'm too late. Diamond hand, 0 days. Not smart. Okay.
That takes a break even up to 119.30 over the next 140
This guy's all in every hand now.
That's about 7% above the current share price. So you don't need an explosive move, but I think the key thing with this unusual option activity is the fact that they're doing options all the way out in the March monthly cycle.
That's because they believe in the comeback story and the future spinoff too that still is coming from one of their energy businesses, the kind of future energy.
Yeah, it rejected the top of that channel now. It's yeah.
First quarter, I think,
yeah.
We heard they did push it back
Not
a little
great.
bit, but all right, shares down today. Let's keep going here, Tom. Applied Materials. By the way, you found a bunch of bullish trades today. So some dip buyers, or did you do this when you came in this morning and you haven't changed it since?
No, I think it's just people trying to take advantage of this pullback, especially in the NASDAQ 100 tech stocks, AMAT right in that wheelhouse. I mean, the stocks had a pretty good run, up about 36% so far this year. They've got earnings on the 16th of November, so that might be a catalyst to the upside. But this software and equipment manufacturer of semiconductors and displays for consumer technology are expecting those orders to continue to increase. Recently, Mizuho raised a price target on Applied Materials, said that China CapEx demands are improving.
There too would be awesome.
Even though a lot of people say that demand is still waning over there. Everybody's waiting for a pickup.
You don't have it.
But they expect a pickup maybe in China orders. And then with the advent of AI, all the chips that are needed in this space, demand there for
I want to just put them all in.
As far as semis goes,
I think he'd probably, no, he probably wouldn't fold.
Narrative. You know, they'll cross across multiple sectors within the chip business, right?
Getting back some chips, that's the least I can do.
Whether it's automotives. So the total addressable market for this equipment chip maker is pretty robust at this point.
Got a queen,
we
yeah.
saw some call buyers.
Wow, I can't believe he checked there. He got scared. I maybe could have put them all in then.
That earnings event in mid-November.
Of course, he's not going to slow play.
Of the 140 strike calls in there. Average debit of about.
Or maybe I would have had him fold. I mean,
so that break even of 145 over the next 51 days. That's about 11% above the current share price in AMAT. So expectations pretty high on the call side. And you would expect on a day like this today, Oliver, when you're seeing a big pullback of over 2% in the NASDAQ, that the put-call ratio would start to tilt a little bit more towards the puts. But in AMAT, you know, it's still relatively about that 0.7 level. So more calls trading than puts at this point. So maybe taking advantage of this little dip here that we're seeing in tech.
Okay. All right, so dip buyers here, the whole sector getting smacked. I get the thought that maybe it's a little too broad. I get it, you know, just a bad day. But, you know, it's starting to kind of add up a little bit because the further you get away from NVIDIA, the weaker the sector looks. And I got to say, AMAT too, 130 bucks. You basically got a line in the sand that it's got to hold. Yeah. How about your last one here? We're talking some housing.
He left.
Zillow after new home sales. Shares down 3%.
That is neat.
Still up for the year, though, but that gain is getting smaller by the day.
Yeah, up only about 18%. And think about all the headwinds they've got, Oliver. I mean, interest rates, 30-year mortgage rates up to 8%. Existing home sales are basically non-existent at this point. We had a pretty good, as you mentioned, a new home sales data point this morning, a little bit of a rebound from break last month. But there's a lot of headwinds in this space as, you know, the buying and selling kind of dries up here a little bit. The stock slid over 30%. Look at that on the far right, that chart. Stock has slid over 33% over the last 2 months due to those high mortgage rates and low housing market transactions in this space. Now, remember, about a year and a half ago, they got out of their iBuying where they were going out and buying properties and trying to rent those out. They got completely out of that business. They've got AI across the board in every segment of their business at this point. So that's a positive moving forward.
If you break there, you're getting VWAP.
On that side also. And they're starting to take market share as far as the amount that they
guess these are just lottos at this point.
Transaction from the buyers and sellers on homes.
I know I didn't get the flush there.
On AI, you can reimagine what your house would look like before you buy it using a lot of their tools. But we saw a really big call buyer in here, and this was out in the February 45 strike calls. Trader bought 35,000 of those for an average debit.
I think 1 days
$2.11
after
so
12.
That break even of 47.11 over the next 114 days.
Gives me a little bit of exposure to you close.
Share price. So yeah, it's pretty hopeful, taking a flyer to the upside. Now, you got duration in this trade, Oliver. You got nearly 4 months in this position. Call volume about 9 times normal daily average volume. So this is a really big order for a stock that we typically don't see a lot of option volume in. Remember, this stock in August was above 57 bucks a share. So as I mentioned, it's had over a 30% pullback over the last couple months. But yeah, somebody taking a flyer here with expectations that, hey, maybe that November 1st earnings event will be a catalyst to the upside, or hopefully we get a pullback in some of those mortgage rates and transactions start to pick up because that's their bread and butter where they make money.
Got it. All right. Yeah, pretty hopeful, but it seems like that is the name of the game throughout all the trades here today. So, all right. Call it confidence. Call it stubbornness.
20 minutes.
Options buyers, though. It's just because folks are excited to even be able to trade options after the S&P pit froze earlier from SIBO, you know, so they're just buying calls everywhere. Thanks, Tom White, for the options trades. All right, back to the
As a hedge, didn't you buy calls before? Oh, you got puts.
When we come back, then our Schwab panel joins me live here to take us to the bell. Randy Frederick and Kathy Jones. We're trading also in the aftermarket post-earnings, as we'll have a real smart guest joining us.
All right, Jay, thanks for stopping by, man.
So stick around, lots ahead, including an update
still
on
on this channel, still stuck.
Possibly some good news.
Possible we close down here, we don't make it to VWAP. It's always a possibility. A sad, sad possibility. Oh, I should have closed some up there. Be better. Even said I would. I was expecting to be green though. It kind of threw me off. On the way out, not on the way in? It's messed up. Have a good Wednesday, Jay. Just a big range down here. All day was put in 151. I sure hope it's not a new low of the day. Be pretty sad for the bulls. I feel like the bears also wanted to get to VWAP, get a higher price to short it. This isn't liquidity, they need it higher up here. Better for them. Re-enter. Buy. If it makes a higher low here, continues on this upward channel. Only 15 minutes to go. I really am going to be holding these to after hours.
back end of the curve selling off here in anticipation that yields are going to continue to hold at these higher levels for an extended period of time.
All right. Dan, as you mentioned the 5-year, I want to come back to that for a sec because tomorrow we've got the 7, and the further out we move on the curve, the more dramatic those
I'll
options
check you up.
get, I would think.
Man, you're coming in later and later.
And also,
End of the stream already, psych.
They're going to be issuing even
Could have been over.
Numbers of, as far
10 minutes
as
Fugazi. Hopefully it's a
what they're trying
rip to VWAP.
generate in those auctions. So we're going to see a big uptick in the offerings amounts next week. So that's something that the market's watching very carefully this week. As you mentioned, as we move out in duration, what's the bid to cover? What's the demand going to look like? Couple that with expectations of next week with increased offerings as well.
All right, nice, Dan. Good eyes on the options. Definitely playing a role here, and going to play more of a role if they get worsen. GDP might just be enough to send yields higher tomorrow, though, with the expectations of 4.2 and the whisper maybe for higher. Thanks, Dan Deming, managing partner at KKM Financial. For a spot of positivity, let's bring in Jenny Horn, coming to us live from Chicago with the winner on the day.
You guys want to see GNI?
Jenny, it's Ford and the developing story here about the UAW. What's going on?
I know, who would have thunk that we'd see Ford,
Good
even
night.
GM, as the brightest
Thunk
spots
isn't a
in
word.
these markets as we did get some rumors that we could see the UAW nearing an end to its 6-week-long strike with the Detroit Big Three autos. Now, I will say I'm a little bit tentative of this story because right now the key sources across AP and Reuters and various news outlets is people familiar with the talk. So, but you can see from the intraday chart, 1 p.m. we got this news and shares did spike, so the market tends to believe it. The people that were reported in this initial news release did say the union made a counter offer to Ford. This proposes a 25% general wage increase over the life of the new 4-year contract, and did say that right now this is better than the previous offer, which was a 23% wage increase. Now, the Ford deal would also include this cost of living pay increase that could lift the total raise above 30%. So that would be a lot closer to the 40% that was initially proposed, but the UAW has rolled that back slightly. So as you can see, can't argue with the fact that shares moved, but more important to me right now, because right now this is still to me very speculative, is Ford has earnings tomorrow after the closing bell. We just heard from GM. They withdrew a lot of their major EV targets. So any clarity on Ford's long-term strategy and the impact of these strikes, I think, is going to be so critical. B of A actually recently calculated that this strike has cost about $120 million for Ford just in the third quarter. But
Dang it, I folded.
A more sizable hit now in the coming quarters. So EV targets, long-term strategy will definitely be important. And GM gave pretty strong earnings, but it didn't matter because they withdrew so much of what right now the street likes, and that's their investment in all things EV. So I'm still waiting on clarity. The fact that we haven't gotten from neither Ford nor UAW to me says this is still right now sort of like buy the rumor, sell the news.
Medical?
But
oh man,
hopefully we reach
sorry.
progress because 6 weeks of
Bulgarian?
pay for these employees is
Pretty
concerning.
cool.
And we're also seeing some now headlines that we could see another factory.
At least you're back in your
Canada
game.
Forge being
Not
shut
trying to
down
teach me
as
English
soon
anymore.
as this week.
All right. Good news, I guess, compared to what could have happened or the general kind of worsening of their discussions that was characterizing last month. It kind of feels like we're generally slowly turning to something a little bit, more symbiotic, I guess. Maybe they're coming together somewhat. Thanks, Jenny. Ford shares up. GM
10 minutes for Gazi. Here we are.
Able to
What we
get
got?
out of the way of a market sell-off today. Let's talk about what's happening and let's
Getting
discuss
crazy
the big
cards
picture
here.
with our Schwab team coming up next. Randy Frederick. and
We're not
Kathy
getting a
Jones
VWAP, I don't
literally
think.
standing next
Maybe
to us. Let's
after
get them on
hours.
stage and chat. We'll be right
Good
back.
earnings.
I was born on the south side of Chicago. It's been a long...
Got a flush. Get out of here. Definitely getting cards. Not getting the market though. 5-minute finger slap. Finger slap it up to VWAP. Not gonna happen. Yeah, maybe our only hope with crazy good earnings spike. Flashtastic. I think it's just gonna stay in this range. Gotta wait for earnings. Now to recap what I did wrong today. I got stopped out of great trades. So, and I don't think that would have happened with 1 days with the strategy that I do. Maybe 1 day's tomorrow. 1 day's afternoon. I think so.
So is that kind of where you're getting that kind of crevice that might be in the market we could slip into?
Yeah, a little bit of that. And I think, a lot of it has to do with earnings, right? I mean, the big Magnificent Seven, we've had some divergences, right? I mean, Microsoft did well. Google, unfortunately, did not. We got a few others coming up. So if the mega cap's not holding up the market, the rest of the market's not going to follow in all likelihood, at least not in the near term.
So right now we've got some of these big caps kind of bouncing off each other, but net a little bit negative. But to your point, there's some winners in there too. And just in the last 10 days, some of these companies are making 52-week highs. What about in bonds, Kathy? Is there a two-way trade, or is it just like, buckle up, we're going for a ride?
Well, it's been sort of a ping-pong ball lately, especially its 10-year. We've got 20 basis points in either direction. I think we're not done with this whole sell-off in the bond market. I don't know, when it ends or at what exact point it ends. I think we're near the end, but there's still, you still have buyers stepping back and saying, I'm just going to wait till the air clears, right? We've got a Fed meeting coming up. We've got employment data coming up. We've got the PCE coming up later this week. I think people are just standing back trying to figure it out.
How important is it that what we've been getting in bonds has not caused a big move up in the Fed funds expectations? Is that a game that's going to be a catch-up game where all of a sudden we are going to start to see the 2-year moving fast again? Are we going to lose any of the steepening? Because it seems like at least right now we are still getting the steepening, which should be at least more encouraging than a year ago.
Right. So 2 years really going to just depend on growth expectations. So I think most of this move up has been adjusting to the fact that third quarter GDP is going to be 4% to 5%, right? And that means the Fed's higher for longer than had been anticipated. So until we get signs that growth is slowing down, that shifts the expectation for the Fed. I don't think we're going to see 2 years boiling up a lot higher unless we get another growth surprise in the fourth quarter. Seems unlikely, but...
What would constitute a surprise for you tomorrow for GDP?
Well, if it's above 5%, that would certainly shock a lot of people. But we have a lot of people in the 4.5% to 5% area for their GDP.
Yeah, I think 4.5 is about the expectation, isn't it? That's what I thought.
So we have a lot of people bumping up against that level.
Atlanta Fed, too, even higher, right? Like pushing, but that's the Atlanta
They're
Fed.
always way up there, though.
The thing that seems like the problem for stocks, Randy, is that the bond move, what's great about the bond markets, we look and we see yield going up, but the causes are completely different from a year ago.
All right, I guess we got a little exposure for Meta.
Steepening versus flattening couldn't be more different, but it's like stocks
Apparently I'm
just
bullish.
go up, yield up, bad for us. And what does that mean? Does that mean stocks are just too expensive or what?
Well, I mean, anytime you've
Probably
got
was your fault, Ike.
alternative to
I'll invoice
getting
you, don't worry.
a 4 or 5% yield to equities, then all of a sudden you hold them to maturity, you get back 100%. You can't always count on that anytime you buy a stock. So
it doesn't matter why they go up; they reach that level.
It doesn't matter why they
go
up.
I drew this channel. Should have respected it.
It makes equities a lot less attractive.
Market certainly did.
Any growth stocks, any new
I
companies
respected it with my positions and closed some there, or all.
Kind of thinking about where we are here with advisors, as we talked earlier with the team at Baird about Maryland Stanek, about how the bar right now for
gambling today, which
products is very high, right? Because not only do you have
what I
to
wanted
hit
to
5%,
do.
but given the risk you're going to be associated with it, given that, as she was pointing out, you get a tax-free muni for 8%. What does an equity investor then do to kind of get that extra oomph? Does it come from the options market? Do you see products that capture?
Okay, I guess I still love you as long as you pay on time.
For an equity investor, I feel like they need to add more bonds, to be quite honest with you, because unless you expect rates are going to continue to go higher, at some point those rates are going to come down, and when they do, that bond portion of your portfolio, there's a lot of talk this year about bonds not doing well for you, but if you buy them when they're not doing well for you, that means the good times are in the future. So I know an equity investor doesn't want to hear that, but sometimes I think that's the right move.
10 minutes Fugazi, nothing. 5-minute finger slap, nothing. We're just in this channel. Consolidation. All right, Meta, let's go.
Well, I mean, there are stocks in the utility sector and in the staples area that are paying dividend yields that are comparable to what the bonds are paying, but there's still a lot of price risk, and some of them haven't really performed that well. We're in a pretty cyclical period right now, and those types of stocks have actually underperformed here lately. So they got driven up in price a lot previously when they were really the only alternative because bonds weren't paying anything. Now that you can get something out of bonds, unfortunately, they haven't done as well since.
It's a great point as well. Randy Frederick and Kathy Jones, fantastic convo. Thanks a lot.
My card?
About a minute and a half until the bell. We'll be right back to close it out. We'll see how ugly it gets.
Are you trying to slow play me?
We do have some earnings. Meta is the highlight, of course. Mark Zuckerberg. Can he beat
flush.
expectations and turn the story around, or is he stuck
They
in
both
the
landed a
metaverse?
flush. Or no, he got aces. All right, 1 minute to close. Yeah, I don't even. Someone told me. He loves you, just gotta pay on time. Okay. Hey, you're nothing. Could have easily bluffed me off of that. Whoa, that spike blows. Come on, Meta. There's the bell. On SPY options, you have 15 minutes after close to trade them still. So we do have some big earnings. I'm going to see if we have a little chance here after hours. Warriors guts. Has come up a little bit. I don't think it's been released yet though.
In case you're just tuning in, it was a rough day for stocks. Closing bell brings red on the candles after an early drop turned into a real meaty sell-off here. It was basically straight down all day with the low coming in around 150.
Zero.
That's Chicago time. I'm in Philly, so 250 on the East Coast is when we put in the bottom, but there was no bounce. We closed pretty much at
And no
the
bounce.
lows. The S&P about 9 points off the low, finishing for futures. I'm looking at about 42.12. The index at 41
Doing
and
better.
86.
What's raising this buy? Meta isn't.
Still some hope. Meta around the corner, and it dropped 4% coming into its earnings. So perhaps the bar there has been lowered a little bit for one of the big cap winners that just put in 52-week highs this month. Caroline Woods and Kevin Green join me as we await those numbers. We're also going to take a look at Invisalign maker Align when that comes out to kind of bide our time here. But let's talk generally about the market.
I want
as
to
a
sell
whole.
some right here.
Kevin, give me a quick thought here on what happened today and what the main cause of this selling was. Because there are a few options, right? You could pick earnings, you could pick bonds.
Yeah, definitely. We had a lot going on over the last 24 hours. I think it first kicked off with Google moving to the downside post earnings. And then today we had a lot of news when it came to the geopolitical front. I mean, we have a situation where we might see a little bit of a slowdown when it comes to the invasion in Gaza, but we also had a 5-year Treasury note auction that wasn't that great as well. That's what also pushed yields to the upside. So I think we're just seeing a lot of pressure. Markets really trying to navigate it, and hopefully Meta and Nvidia and Apple can actually change the narrative as we start having their earnings coming out.
He's gonna go all in either way.
In the next couple of weeks.
Have to call that
Caroline,
flush.
Was it,
oh, you had the what?
I'm sure
All spades.
From,
2 pair on the river. You guys got so lucky.
Was it manic depression?
You guys got
how
lucky.
are folks handling some tests of some real key
Where are my
levels
chips?
here?
No, I think the thing we have to remember is that traders make money when people buy or sell. So anytime there's beeping and buzzing, it means that they're making money.
Yeah.
So yes, maybe
There's
their
a lot of
retirement
beeping and buzzing there
portfolios.
today.
Yeah, it certainly was crazy, but it doesn't, you don't really see the mood of the market based on what the arrows are doing for the major indices. But it could be a case of maybe some reset expectations heading into earnings. I do think for Meta, Alphabet obviously was really punished today because of cloud revenue, but their ad revenue was actually pretty good. So that could be good news for Meta. I will say I am starting to see Align Technologies start to come out, and that had a huge 4.5%, well, I shouldn't say huge, but 4.5% decline heading into these results. This was a stock that at one point was the best performing stock on the S&P 500, and it then really since the summer it was trading around over $400 a share. Now it's at $253, and we're seeing a huge drop on the initial reads. Q3 adjusted EPS of $2.14, well below what analysts were expecting of $2.26. Meanwhile, in terms of revenue, that was also a miss, $960.2 million. The expectation was for $996.95 million. And I was curious about this one heading into these results because last quarter when they reported, they were actually continuing to talk about an uncertain environment but strong signals from the consumer. But you would assume that if consumers are starting to pull back and cash is wearing thin, or people are starting to be more budget conscious, they might actually pull from things like Invisalign, which of course is a braces alternative. We know Align has really been focused on trying to get the younger demographic. They've spent a lot on marketing, especially on TikTok and social media, to try to get that younger demographic in. It doesn't seem to be working, at least in terms of these numbers. Meanwhile, in terms of the
not seen a
Q4
reaction
outlook,
yet.
they see revenue of $920 to $940 million. So that would be sequentially a decline from what we saw in Q3. So
open a little bit, but it's not really breaking any ranges.
Down about 15% in after-hours trading, as far as I can see right here. So it doesn't look like earnings are going to turn this company around.
It's had a pretty good bounce, though. It's good to sell here so far.
Not these ones, at least.
Waiting to see Meta, though.
Is that there's another little company called Smile Direct Club, which was a big, popular, kind of uproarious trade when it debuted.
Smile Direct Club is now on the
back in
OTC.
2018. Now that's an OTC pink sheet around 7 cents because it didn't
Meta
go so
dumping.
well. And the market for
I sold half when I saw that.
Like dental support has remained basically in the dental studios. The send to home and fix experiment didn't work. There was a bunch of legal issues too. So I wonder though, like Kevin Green, is it still kind of a company that operates sort of in a monopolistic world in a way? I mean, it feels like they still have a very strong.
Barely sold half in time.
They do, but you are also now seeing a little bit of that cyclicality as we are seeing a contraction on a
I
quarter.
probably won't get their earnings call before 4:15.
Every line item here, when you're looking at the
hopefully there's some kind of
that we're down about
green
3.3% on a year-over-year basis.
Something bullish on the earnings sheet.
Net revenue down about 4.2%. So you really don't want to see this type of reaction here in the market. And unfortunately, going into
hold on, Friday 420 also we have next week. BA call up close.
In today's session,
good thing, Guts. Thanks for hanging out, man.
Around 11% move to the upside or downside. So there was a fair amount of activity when it came to the options market, and it was skewed bearish. And now we are seeing that reaction to the downside here. So I think, unfortunately, we did see a nice little rise to the upside. They did see some demand there. They may have had some pricing power, but we might be seeing the consumer starting to shift when it comes to these type of products and focusing more on staple goods, as we've heard from some of the staples earlier this week that were actually pretty positive when it came to overall demand.
All right. Okay, so it's not like
some other earnings just came out, so I just reacted a little bit.
But it just seems like also maybe after its epic run, there's a little valuation kind of work off here that is aligning itself, pun intended.
I try and wait till basically
sustainable growth rate.
Last minute.
I mean, don't forget the stock traded $730 during COVID as we were all
7 minutes.
Just, getting our teeth fixed, I guess. I was a little late on
it. Rallying. Some other earnings just came out. Maybe IBM.
Went quite well this month. All right, let's talk some Meta here.
What's their ticker? IBM.
Oh, too much information there.
Oh yeah, my IBM maybe just came out.
Let's talk about what to expect here. The 20% top line
does it have that much of a weight?
We're supposed to see some pretty booming growth here for this company. However, $300, only $80 off the high. I wonder if we've got a bar here that we could possibly trip over if things don't go perfect.
When you're talking about a company that's
flush, I guess.
50% year to date, the bar is certainly higher than even in a line that was only at 20% heading into those results. In terms of that 20% top line growth, that should be driven by a 21% increase in ad revenue. And as I said, we saw pretty strong numbers from Alphabet, so that could bode well for Meta. It didn't necessarily
Meta's not out yet? Shut up.
Today, heading into these results,
must be.
Meta
a huge drop.
Some pressure, down about 4% heading into these results.
That was from nothing?
A little bit of selling continue after hours, but haven't actually seen the numbers cross yet. But the number we're looking for the top line is $33.45 billion.
What? They said they're still waiting for Meta?
For EPS, we're looking for $3.62.
What was that sell-off from?
Daily active users, of course, and monthly active users, also very important. That should be in the 2 to 3 billion.
I was just assuming.
For, daily and 3
that big of a move with.
So keep an eye out
wasn't
for
just
that.
like a flash.
And of course, there'll be a lot of talk about AI, I'm sure.
That's weird.
But the big question is, how much will they talk about
Someone
or
knew.
not talk about
Stop loss. I mean, it wasn't like just a candle. It's like it's hung out down here. It wasn't just like a wick. Wasn't that right there? It was.
They had a loss of
it's still down.
$3.9 billion in their
Someone knows or something.
And they expect those
it got leaked.
Incrementally or
but it got
increase
leaked.
meaningfully in 2024. So let's see what they have to say about pairing expenses.
I'll be bummed if it rips, and I would have. I would have actually done better on these contracts.
But this is the one kind of
won't be bummed, but
weak point for Meta that never seems to impress investors. So let's see in terms of commentary
5 minutes
what
for
they
me.
have to say on that front. But not seeing any big moves. So assuming we haven't actually had these numbers come out yet.
What are you talking about?
Okay. Yeah, numbers not out yet. Little slow here. Come on, Meta. Let's go. Poke. But let's keep talking here.
Well, I sold half, so now even if we get a big rally, I'm not.
Seems to be the.
It's got to be even bigger now.
And how we got here for the price. Does that though need another layer of
things move so crazy after hours? It's like
more about product growth. It's one thing to like clean up your bottom line, not spend quite as much. It's another thing, though, to have wildly successful.
Some earnings are moving SPY though. It's holding up. I mean, it's bounced. It's up 0.14 after hours.
With the goggles and everything else they're working on.
Yeah,
I watched
what's
the
this
video
guy?
the other day where Zuck was talking about going to play basketball with people in the metaverse.
You got two pair. You got pocket something.
All right, I get
two pair. Yeah, full house.
Cool. I can play basketball now with
what?
From China.
I got a full house too. Oh. Dang, that's too bad, man.
It's probably not as good as
Yeah.
anybody can. But you know,
I'd probably
the
leave also.
efficiency is probably going to be over, unfortunately, because you are
Oh,
going to
that
see
sucks
and
for
they're going to be
him.
forced to actually
Well, he
increase
just
their capex spend in order
snaked
to
his
be
full
able to
house.
build out the infrastructure for their AI products. And what also comes with that
I'm
is their
on a roll,
operating
baby.
expenses. So you're going
All
to need
right,
to have
4
the
minutes.
staffing in order to be able to, you know, spin up those projects and things of that nature as well. So I think they probably cut costs in the right areas, and now they're just going to have to be able to explain to their investors where they're going to be spending this money. As once again, you're going to probably see that increase, but I'm not sure how much it's going to have of an impact when it comes to the bottom line. I think the Reels product is going to be the big X factor for this report. If we continue to see growth in that area, and they've already implemented a lot of AI within that particular product offering, if they're starting to see that benefit in the here and now, I think the market is not priced for that.
3 minutes. Are they going to try and hold till after options?
Today, I think that could be the upside.
That would be
surprise.
jacked up.
But if we do see a little bit of slowdown, or if they do mention that ad spending is slowing down because of this conflict that we are seeing in the Middle East,
Well, that's too bad. It had that huge move and there was no earnings.
Talked about yesterday, that could actually make the market a little bit more cautious when it comes to this name. But once again, Reels is going to be the X factor that could push the stock higher.
Great point. Good reminder.
3 minutes.
I did forget about that. But part of the reason, one, is that like I don't, use.
Guess
Reels.
I could let
I
these
don't use Instagram. I don't
expire.
do that stuff. But I know how it works. And
Or actually, no, I can't because they're in the money.
Like not a real
Probably has auto
product,
exercise
right?
on.
Just kind of copying TikTok,
I suppose I could take 500 shares. Spy.
Well, it is Instagram, so I get that that's popular. That's
That
a
has
key
worked
growth
out
driver.
well
I'm
for me
glad
before.
you, but to me, it just doesn't
I've been
meet the
short
bar
like
for like innovation
a lot more.
or creativity.
1,000 shares.
Again, I'm biased because I'm not an Instagram
That open.
person. All right.
I got exercised, or no, I had a credit spread expired in the money.
For us for when Meta does come out. When we return, George Tillis will take us through.
I'm actually surprised.
First, which is actually a very interesting stock again.
They haven't closed these on me.
Meta, when it comes out, we'll let you know.
2 minutes. Come on, Meta. They might be waiting for options. The spread's really wide in after hours, though. Got like a 7-cent spread. Oh, it out? What's up with that gap? I just gapped down like that. I go to sleep. Looks like it's halted. Oh my gosh, 30 seconds. I do it 10 seconds. 5, 4, 2. Gotta sell it. Gotta do it. Been submitted? Wait, what? Why isn't it billing? Bill. That'd be a limit order? Bill. Oh shoot. Didn't fill. Let's see. Okay. I guess I'll let their margin department deal with it. Are they gonna have shares or? Yeah, I don't. It's weird because I could market fill the other one. Sound wouldn't fill. Huh. bad. Yep, look at that. Right after the options market closed. Boom. Boom. Would have been hard to get a good fill there. The spreads were widening too. Oh, up and down. Seems like they were waiting for that though. I didn't sell too late. Oh, I had 10 seconds. It was submitted, it was in there. It said working. It was a market order too. Steering wheel, rudder, anchor. No, we just have debt. You gotta get out of debt, and then maybe I'll buy a steering wheel. Helm. Life raft, flare gun. Okay, maybe we have a flare gun. Prayer flag, porta potty. Yes. All right, I gotta take off. I don't know if not to eat is. Talk to the wife, see what's going on. Red day today. I don't even want to review. I think I need to trade 1 days maybe. I had great entries, not all of them, but maybe I'll make up for all of it tomorrow when there's a quarter point gap up, and I have 500 shares of SPY. We'll see if they auto exercise. I don't know what they're gonna do. Let me quick just review some of this. Frame 56, 5 calls. Need to trust my charts more too. 5 calls there. Sold one at 957, sold one at 959. Both profitable. $957 sold, $959 sold, little profits, and bought more at 1009, more calls, 1009, 1014, and 1024. Bought 3, 4, 5, 6, 7. Oh, that's when the market halted. Dude, today sucked, man. That morning was so messed up. So 1009, I bought 3. 3 more calls. And then at 1014 and 1024, I bought 2. 1014 right here, I bought 2 calls for 78 cents. And then at 1030 or 1024, I bought 2 more, the exact same price. That's strange. Yeah, both market orders. Remember when I said, if you go back to the stream, you'll hear I was like, that took a while to get filled. Remember I said that? I'm like, it took like 10-15 seconds, and one got filled, and then the other one got filled. The options market was already shutting down then, I think. So the market maker was just filling me, but there was nothing. They were providing their infinite liquidity, and they were not getting any fills because there was nothing then. It just was 78 cents on both of them. I'll just show you. 78 cents. How weird this is. 78 cents. 10 minutes later, 78 cents. And then I started to notice nothing was moving. Those were 10 minutes apart, those buys. I know they weren't the same price. What's my brokerage gonna do about this? Nothing. Nothing. 1032, I thought it was broken, but I didn't want to get stuck. And SPY was up here, 1032, right here. So do you think it's gone up from here to here in that short amount of time on dailies? Yeah, I would too. But I fill at same price I opened it at. They just refunded me. The market order just gave me back that position they were holding, I guess. So broken. They shouldn't have filled the first one if it was closed. Definitely shouldn't have filled that one if it was, if I snuck one in, then they should have waited to fill this one until the market opened back up. Because they can't just give me the same price and say, oh no, you're good. That's fine. Here's your money back. Try again later. They didn't say any of that stuff. They said filled. 1042, then the market turned back on. And then I think the pricing was jacked then. Because it's just like they didn't go up in value that much. Look, 1042, 90 cents. Way up here. You know why? It's because this 78 cents was probably wrong too. This should have been cheaper. This should have been like 70 cents or 72 cents. Because this from here to here on a daily, at the money, I should see 40% or so. This was not 40%. Yeah, so the pricing was jacked. Anyways, sold one there at 1042. Sold another one at 1046. And I'm like, I'm not up that much. I'm up like 27, 28%, which didn't make sense. And then sold the rest. So I had to find entry, just the market broke there. All these stupid excuses for crap. Right there, head and shoulders. I didn't like the pricing either. I'm like, I'll just get back in. Maybe I'll get a better pricing. Bought 5 puts, 1125. Where's that? 1125. Right here. So broke the channel up here. I don't know why I didn't get there. I waited. There might have been another one here. Not sure. Bought it there though. Then 1142, I bought 5 more, so I was averaging into them. Which isn't bad. That was just on this candle though, so not a great entry. Well, that's because it broke this channel, which I liked, but then did this big rip. This is the choppiness that just got me screwed over. After that CBOE totally closing down. I closed 5 at 1146. Yeah, right here at this bounce, unfortunately, for a loss. Bought back in 10 more at 1151. So I had the right idea here. Bought back in 10 more here. Rebroke there. Realized this was just chop. But the trend, the direction was right. So I had quite a few of them at that point. Sold 5 at 1153. Right there. Was that even for a profit actually? No, I was down on it. 1151 to 1153 I lost. That's crazy. Yeah, I was pretty flustered from all that, the options at that point. I should have just held through this. Sold 5 there, and then sold 10 at 11. Oh, dang. Yeah, then this little bounce screwed me. Had me all flustered. So dumb. This is like nothing. This is a nothing bounce. Need to start drawing some channels sooner. Drawing these lows here. Gotta correlate it with these highs. Okay. Yep, should have done that. Because I closed myself out there. I don't even think these were stopped. No. Yeah, I closed out all of them. I had 20 contracts, 25 right here. Those would have been big gainers today. Yeah, then I was frustrated. Bought back in at 1038. Way down here. Broke that channel. This was just melty and choppy and so I didn't actually I stopped myself out. I should have drawn this line, put it on the top. Just having them there visually like helps you to hold and helps you to sell, just like bumpers. You can visualize it, but actually drawing them in helps. 1038. Yeah, on that break, bought puts. 10 of them. Sold 2 at 1043. Finally a working trade. Still just choppy though. Sold 1 at 1053. Nice exit on that finally. Got a good exit. 1056. Sold 1. Sorry, 1256. Sold 1 at 1258. And 101 here. And then sold, looks like the last 5 at 101 also. I didn't like the chop. I don't know if I had this channel at that point. I should have put it in. Yeah, I could have kept holding those, given this did this move. Tried to call it. Started calling reversal at 115. Too soon. 113. Bought 10 calls. Right here. Ugly. If we had them move back up to safety VWAP, it would have been fine, but too soon. Bought 10 more at 118, so I had 18 at this, or 20 at this point. Right there. Got another S. 118, sold 2. On the high, I think I was a little bit profitable maybe. Sold 2 more at 119. Then sold 16 at 124, so sold the rest right here. So that's good. At least didn't hold those too long. That was a big position I could have held way too long. But I saw it was rejecting and I sold. Yeah, today could have been much more red. 155, started buying calls again. Right here. Not bad. And then those just never really materialized until after hours. But maybe I'll get exercised. And then I'll have a bunch of shares and hopefully SPY gaps up and makes up for all of these losses. Yeah, I bought 10 at 155. Sold 5 at 405. Right there. And then the last 5, I didn't sell. If I actually waited, if I sold all of them up here, I would have been green on it. I think it was green a little bit, even on those last 5. But being the dailies, I'm not sure. Yeah, anyways, that's it, guys. Drain plug, kind of bored. Emergency flare gun or drain plug. I'll go with the drain plug first, and then once I get that sorted, then I'll buy the flare gun. Seems like the right order to buy things. Okay. Thanks for your support today. Appreciate it. We'll see you on Discord. You on Twitter. Flare gun, yes. Thanks for your thumbs up. 19 of them. Well done. See you guys. Have a good afternoon.